FairTV, are we ready? Hey, good evening, everyone. This is Lori Charlton. It's March 21st, 2024. I want to welcome everyone to the Board of Finance budget hearing. I'll call the meeting to order and ask that Mr. Mottola please lead us in the Pledge of Allegiance. To the members of the public, this is the fifth Board of Finance budget hearing for the fiscal 24-25 budget. It is our last hearing for scheduled presentations from department heads and outside professionals to go through the budget numbers for next year. This Tuesday, March 26th, our agenda will be focused on reviewing follow-up items and questions that came up during our first 5 meetings. On April 1st, we'll have a public executive session that will allow each board member an opportunity to discuss their views on the budget, any final deliberations, and then on April 3rd, we will vote. We encourage residents to send comments and questions at any time to bof@fairfieldct.org. If you write to the board, please include your name and address for the record. Residents may provide live public comment at each meeting, including tonight's, for budget topics on the agenda. Live comment will be called for at the beginning of the meeting for members of the public, whether attending in person or via WebEx. This gives board members the opportunity to hear from the public before we begin our deliberations. We ask that comments be limited to 3 minutes per person. If you're on the WebEx this evening and you want to provide public comment on any of the departments listed on tonight's agenda, please put your name in the chat box now and you'll be recognized shortly. There will also be a public budget hearing on Saturday morning, March 30th, 9:30 a.m. at Fairfield Ward High School. That is an in-person only meeting, and it's an opportunity for residents to share their input on any aspect of the budget. So with that, we'll move to item 3. Discussion on the following budgets. There are a series of departments listed on the agenda that relate to retiree and active employee benefits, human resources, unemployment, legal, contingency, and finance. For members of the public, throughout the discussion, we'll be referring to the budget book that's posted online, starting on page 71 of the materials for tonight's meeting. When referencing page numbers on the budget book itself, I'll be referring to the page numbers that are printed on the document, not the PDF page numbers. There are also additional backup documents that are posted online for various departments on the agenda, and I'll reference the PDF page numbers for those when we get to each department. All right, so before we move forward, I don't see any members of the public on the WebEx. Is there anyone there who wants to provide public comment? Okay. All right, so we can move to retiree benefits. That is Department 1310. It is page 80 of the budget book. There is also supplemental backup beginning on page 9 of the posted materials for tonight. That is the Milliman report. These numbers have been, I'll say the retiree benefit numbers, pensions specifically, have been updated by Milliman since they were voted on by the Board of Selectmen, which is typical. So tonight we're going to review the updated numbers. Also, as is typical, the town has prepared a recommendation for us to make modifications to the budget for the updated numbers when we vote on it. And after we have the presentation, we can have Frank take us through that. All right, so I believe we have Jen Castellano here from Milliman. Welcome. Thank you for being here, and thank you for taking us through the presentation.
Hold.
Yes, you have to hold it down. And Ms. Castellano, if I could also ask a favor, as you go through the presentation, are you going to put it on the screen, or are you just going to refer to the hard copy?
I'm trying to put it on the screen. I'm just having some internet trouble, so I just had to restart my computer. But once I can put it on, I'll put it on.
All right. And Ms. Castellano, if you want to get started in the meantime, it'd be helpful if you just maybe refer to the page number that you're on in your presentation. We all have those materials. And again, for the public, they are posted online beginning on page 9 of the PDF.
Okay, thank you very much. Good evening. It's nice to be here. First, I'm going to go through the results of the July 1st, 2023 pension valuations for the town plan and the police and fire. If you go to page 2 of my presentation.
So that's just for everyone's, I think it starts on page 15 of our backup material, if I believe that's correct. Town of Fairfield pension plans, July 1st, 2023 valuations. Okay. And so you want to go to page 2 of the presentation.
No problem. Okay, so this first page goes over the demographic information in the plans over the last 5 years. On the left-hand side, we have the demographic information for the police and fire plan. As you can see, there's 3 main categories of members. We have what are known as active members. Those are people who are currently working for the town. We have what we call terminated members. Those are people who have stopped service with the town and no longer work for the town, but have yet to start collecting a benefit from the pension plan. And lastly, we have members in pay status, who are people who have retired from the town and are collecting a monthly pension benefit. On the police and fire plan, I want to note that it looks like the active population grew from last year to this year. There were a numerous amount of new hires, 17 new hires in the plan, which caused the population to grow. On the town side, there were a significant number of retirements and terminations, but that was expected as far as our actuarial assumptions were concerned. And also there were a fair number of retiree deaths, but that also was expected. So the numbers moved in accordance with our expectation as far as the demographics are concerned on the town side.
Lori, can we ask questions as we go, or would you prefer to save it at the end?
Maybe we'll save it to the end if you don't mind, Jack, but we can do it. We'll do pension, do questions, and then OPEB and do questions if that's
Okay.
all right.
Great, thanks, Sergeant.
Thank you.
All right, if you move on to the next page, we have more information about the active membership in both plans. Both of these charts are a distribution of age and service for the active members of each plan. On the left-hand side for the police and fire plan, you can see that the distribution is fairly widespread from younger, early service, short service people to those who are older with longer service. And that's because the police and fire plan is still open and accepting new hires. So we expect an even distribution across all ages and service. Moving on to the town plan on the right-hand side, the numbers are more concentrated in older people and those with higher service, and that is because the town plan has been closed to new members for quite some time now. So we expect that town plan to mature over time, and this graph to concentrate towards the bottom right-hand corner over time. Moving on to the next page. We have some information about the plan's assets over the last 5 years. These charts represent the market value of assets as well as the actuarial value of assets. As a background, the actuarial value of assets does not reflect them. It's not the same as the market value of assets. What it does is it recognizes investment gains and losses over a 5-year period. Currently, for both plans, you can see that the actuarial value of assets is greater than the market value of assets. And what that means is that there are unrecognized losses, primarily from fiscal year 22, I'm sorry, fiscal year 22, that have not yet been recognized in the actuarial value of assets. They've only been recognized, 40% of those losses have been recognized, there's still 60% left to recognize. What that means is that in the near future, absent any additional offsetting market gains, that will put upward pressure on the town's contributions into the plan and cause the funding ratio to deteriorate just due to that recognition of those losses. Moving on to the next page, we can see the investment returns in the plan over the last 5 years, both on a market value basis and on an actuarial value basis. The darker green dots represent the market value returns, and the lighter green line represents the actuarial value of assets. And this is a classic picture as to why we smooth assets and use an actuarial value of assets for purposes of calculating the funding contribution. You can see that the actuarial value of assets is much more stable over time than the market value, which also leads to more stability in the town's contributions. Moving on to the next page, we have information about the liability of both plans as of July 1st, 2023 in a recent history. First with the town plan, which are the blue sections of the graphs. We expected the liability to grow to about $270 million as of July 1st, 2023. However, you can see it's actually greater than that. The reason for the liability being greater than expected is two main reasons. The first is due to demographic experience during the period. Excuse me? Yep, I'm getting to the, the $270 million assumed all of our assumptions would come true as far as demographic experience concerned. With the updated demographics, the liability grew to just south of $273 million. So the $3 million difference there, mainly due to significant salary increases, higher than expected, primarily due to the settling of the paraprofessional contract that had been open for some time, and they had flat salaries for several years, and then were granted significant salary increases, which drove the liability up as a result. The second reason for the increase in liability was due to the COLAs that were granted as of July 1st, 2023. They are based on the CPI index, but maxed out at 3%. We assume that COLAs on the long term will increase by 2.4% per year. This year they increased by 3%. So they were greater than we expected. Therefore, the liability increased more than expected. The second reason for the increase in liability from the $273 million to $276 million is that we're recommending a change to the mortality assumption. It had been updated a couple of years ago prior to us becoming the actuary for the plans, but the assumption is a little bit outdated. So we're recommending making that update to reflect the most recent tables available at this time. It's a better, more accurate reflection of longevity. And as you know, the longer people are expected to live, the greater the liability for the plan, because benefit payments are expected to be made for a longer period of time. So this is more realistic depiction of the expected future lifetime of employees and retirees. So that's why we're making that recommendation. And that's on the town side. For the police and fire side, it's a similar story with slightly different details. We expected the liability to be about $263 million as of July 1st, 2023. You can see that it's actually, in reality, $270 million. Again, before any changes to assumptions, just updating the demographics, the liability grew to $267 million. So about a $4 million liability loss due to demographic experience. The main drivers of that demographic experience were that there were 2 job-related disability retirements for younger public safety officers. We assume we do have a disability assumption in the plan, but it's relatively low. So when a disability does occur, it's really expensive to the plan, especially if it's a job-related disability, because that benefit's much more valuable than a non-job-related disability. So that was about a $1.5 million loss from those 2 disability retirements. Also, there was significant increases in salary, again, due to settling of the fire contract. So those salaries went up more than we had anticipated, and therefore that translated into the liability increase. And lastly, we made some corrections to some retiree data information that when we took over, incorrect data was transferred to us by the prior actuary. It was discovered by the HR department this year, and so we updated that as part of the evaluation. That had another $1 million impact on the liability. Incorrect data that was transferred to us by the prior actuary when we took over. Essentially, we were told that about a half a dozen people were receiving a life annuity when in reality they're receiving a joint survivor annuity. And a joint survivor annuity is paid over the lifetime of 2 people as opposed to just 1. Longer than expected lifetime, therefore a larger liability. And then again, we're making the same recommendation to update the mortality assumption this year, which increased the liability from the $267 million up to $270. So again, a $3 million difference as a result of the mortality change. So that's how we got to where the liabilities are as of July 1st, 2023. If you look to the funded ratios graph on the side, you can see that the funded ratio has declined mainly because the liability has grown expected, with slightly enhanced by the fact that we're still recognizing those losses in the actual value of assets. So that's put some downward pressure on the funded ratio as well. Moving on to the next page. So we take what happened with the assets, we look at the liabilities, combine those together, and we come up with the actuarial determined contribution recommended for the town to make to both plans. And you can see that for both plans, the contribution increased by about 10% over last year, primarily due to those liability increases that I just talked about. And the contribution originally would have been higher, but we're making another recommended change to some methodology to help bring down that contribution a bit. And I'll get to that in just a second on the next page. But just for comparison, on the police and fire plan, without this recommended change, the contribution would have been $8.3 million for the year. And on the town plan, it would have been $6 million. But I'll get to that. I'll get to that in just a second. Moving on to the next page, before I get into the nitty-gritty numbers and that assumption, that methodology change, this page is just some analysis that we go through on an annual basis as we work on the plans. We take a look at the plan's investment allocations, target allocations, and we apply our capital market assumptions to them. We update this every year to gauge as to whether or not the interest rate assumption that's being used to value the liability is appropriate or not. And if you look at the bottom graph to the 30-year number, the 50th percentile, that's usually what we look towards, because over a long term, things tend to trend towards the 50th percentile. You can see that the expected return on the plan's target allocations is 6.8%. We're currently using a 6.9% assumption. And so that 6.8% doesn't take into account any potential alpha for active management in the assets. So we're comfortable that the 6.9% assumption that's being used to calculate the liability is a sound assumption and appropriate at this point in time. So moving on to the last 2 pages, this is where it's essentially all the information I've talked about, but it's broken down to the nitty-gritty detailed numbers. But I do want to just bring your attention to the last 2 columns of these pages. I'll talk about the police and fire plan first.
I'm sorry, can someone advance the slide? I think it's stuck, at least on what I'm seeing. Thank you. One more. Yep, there we go.
So again, bring your attention to the last two columns on this page. The column that's labeled update mortality is what I already talked about, updating the mortality. You can see the accrued liability on that basis is 270 million. Now, currently, the methodology used for calculating the actuarially determined contribution, there's three main components to the contribution. There's what we call the normal cost, and that is the value of benefits that we expect active employees to earn over the upcoming year. And you can see that in the bottom third of the page there. That number is about 3.7 million. We then reduce that by expected employee contributions, again, because employees are going to fund contributions as a plan that offsets the value of benefits that they're earning. We adjusted for expenses that we expect to be paid out of the plan's trust for the year and end up with a net normal cost of $2.8 million. The second component to the contribution is what we call the past service costs, and that is the amortization of the unfunded liability. So you have your actuarial value of assets, you have your liability. That difference is paid down systematically over a period of time. That amortization period is currently 18 years, and you're currently using a level dollar amortization period for purposes of funding that unfunded liability. If you were to think about a mortgage, it's similar to your mortgage. You take out a fixed rate, potentially take out a fixed rate mortgage, you pay the same amount per year for the entire term of your mortgage, right? That's basically what this is. You pay, in the absence of any gains or losses, your payment would be $4.9 million per year for the past service costs for the next 18 years. And after that point in time, the plan would be fully funded. We're recommending, to help to mitigate some of the increases and keep the number within a more reasonable threshold, we're recommending to change the amortization growth rate component from 0%, which is that level dollar amount, to a 2.2% growth assumption. And what that means is that payment, rather than being flat and level year over year, it's expected to grow by 2% per year. So essentially, you're paying a little less now, a little bit more later, still expected to be fully funded over the 18-year period. But you'll pay a little bit more in total over that 18 years. But it does get you more systematically there. The amortization growth rate is usually designed to kind of be in line with growth of your budget and revenues coming into the town to help pay for these contributions. So the OPEB plan is currently using that same 2% growth rate. So this wouldn't be something drastic. A drastic change. Is consistent with what's being done on the OPEB plan. It's a very reasonable assumption. The key measurement for determining whether or not that growth rate is reasonable or not is to make sure that the amortization payment is enough to at least pay down the interest that's going to accrue on the unfunded liability. And that's more than you're more than cleared that. So that's not an issue here. So my recommendation is to update the mortality assumption and then move to that 2%. And that's where we get to the $7.7 million on the police and fire side. And if you go to the next page, it's the same exact details, same exact scenarios for the town plan. And that's how you get from a $6 million contribution down to a $5.5 million contribution for that plan. At this point, I'll stop, let you digest the pension numbers and take any questions you may have.
Okay, thank you. Thank you very much. So since we've still got this on the screen and we may refer back to it, there it's down, which is fine. Okay, questions from board members on what we've heard so far. Mr. Testani?
Yeah, hi. I just have a quick one, actually. Just go back to the beginning, Jen, for a minute. Where I believe it's maybe page 2, the planned population, you were talking about police and fire members and active versus terminated versus members in pay status. And I understand the fluctuation, you attributed it to 17 new hires, I believe you said. Is that broken out by like how many were police, how many were fire? Do you have that detail?
I don't have that on hand.
Is there a way to find that out?
I can look that up back up at the office.
Yes, that would be great
Sure.
if you could get that to us.
Sure.
Thank you. That's it for now, Lori. I'm sure I'll have more later.
Thank you, Mr. Testani. So while this presentation is up, Mr. Mottola, can you moderate if there's any more questions in the room?
Sure. Any more questions, anybody? Doesn't look like it.
Okay, all right. Thank you, Ms. Castellano. So we'll go
Great
back to you.
presentation. Thank you.
And then I have just the OPEB. This is short, okay. So on the OPEB side, we only do OPEB valuations every other year in even years. So we did not do a full valuation this year. Historically, the OPEB contributions were calculated, 2 years worth of contributions were calculated at the time the original, the valuation was done. We recommended to the town that we should change that methodology this year to reflect more up-to-date information because those numbers get stale, not reflecting anything that's happened in the investments over the course of the year. So these two letters, there's 2 letters in the packet that I think probably are right after the pension, either right before or right after the pension pack.
Yeah, I think they're before.
I don't remember which one came first in the packet. They both went to Caitlin, yep. So it's a 3-page letter. The first page is just a cover letter. Page 2 talks about, it just outlines what happened in the investments over the course of the fiscal year. And you can see for both plans, the OPEB plan returned up 11% during the year. So I'll paste the assumption. So what that means is that it helped to reduce the OPEB benefit liability, OPEB contribution a bit. We had anticipated because of the 11%. So we had anticipated the contribution for the police and fire plan to be $6.1 million. And for the town plan, we anticipated it to be $3.6 million. In reality, the town plan is just south of 3.5 million, and the OPEB, the police and fire plan is about 5.9 million. So a little bit of savings there by reflecting the good asset performance during the year. And so that's the recommendation we made to reflect most up-to-date information we possibly can. And therefore you have the accurate picture of your obligation.
Questions, anybody? No, doesn't look like there are any questions, Lori.
Okay, thank you. I'm just wondering, maybe just Frank, if you can just make sure so that the board understands how the numbers that were presented to us tie into the budget document. So I just, with that, should probably call everyone's attention to the backup that was provided. And Frank, you can walk through this, but if you look at the first page of the backup, there's a schedule there that shows various line items of the budget as passed by the Board of Selectmen. And then there are some changes that reflect some of these updated amounts. And those are changes that the town, based on this, based on the presentation we just heard, would recommend that we vote on in order to reflect updated numbers in the final budget.
I'm sorry, Lori, where are you looking? I apologize.
So I think it's on the first page of tonight's backup. That's the PDF, but it says proposed BOF changes resulting from updated information. Does everyone have that?
Yeah, so
Okay.
Frank's going to take
Yeah.
us through this.
Yeah, so Frank, so the point of this, and just also for members of the public, what this does is, again, since the numbers we were just presented vary slightly from what was voted on by the Board of Selectmen, we don't have to go through this in detail, but what this schedule does is it takes the numbers voted on by the Board of Selectmen, and then it shows a column for adjustments so that the recommended numbers for this board to vote on will match the presentation that Ms. Castellano just gave us. So again, we don't need to go through that in detail, but I just do want to make sure everyone's focused on that because the numbers we vote on will be slightly different than the budget book for those adjustments.
Thank you. Helps.
Okay. All right. So if there's no questions on that, and no other questions on the presentation, Ms. Castellano, thank you. You do a great job of making a confusing topic simple. We really appreciate the presentation and everything that you do for the town. Thank you for being here.
Thank you. It's nice to see you all.
Okay, so we're going to move on to the next topic, which is active employee benefits. This is reflected on page 82 and 83 of the budget book. Similar to retiree benefits, we're going to hear a presentation where these numbers have been updated slightly from those that the Board of Selectmen voted on. And you can, follow along the updated numbers on that same schedule I just referenced. That was in the backup. So the information that's currently on page 82 of the budget book is updated and replaced with a schedule that looks just like that. It's on page 49 of the posted backup tonight. And I think I was told that normally we have Carlton Lindgren here to take us through this, and I understand he's not well, and I think Frank was going to take the lead in walking us through.
It's in the printed backup as well, Frank?
Yes, it's in the printed backup.
Where would that be? I'm sorry.
I'm looking to see where it is in the.
For the, it's towards the back. I believe it starts on page 40 is where the presentation that Carlton presented. But I'm pretty much going to talk about pages 47 and 48. And just because, like Lori said, Carlton, he's sick today. So I'm going to go over this, and then if anybody has any detailed questions about kind of his presentation, but it's standard of what he does every year. The pages from 40 to 46 essentially go over the plan. It goes over the claims experience, high claimants, and so on and so forth. But I'm just going to focus on pages 47 and the following pages and just go over how his update changes the budget. So PDF is page 52. It's PDF page 52.
The backup.
In the backup, it's page 47. So if you have a printed copy and you're looking at the top right number on the printed copy, you're going to go to page 47. If you're looking at the PDF on the computer, you're going to go to page
52.
52. Yeah, sorry.
Goes to 47.
So what we do in the budget is we're budgeting for the active employees. And so every year Aon will provide estimates as we go through the process, they update for a new month of data. So for example, the most recent update I got added claims data from January of 2024, and then it would have dropped off the oldest month. We look at 12 months, so it would have dropped off the oldest month and added 2024. So the numbers get updated as a result of that. So really the only thing you want to look at as far as Carlton's presentation as it relates to what we do in the budget is on page 47, which is where you see the active populations and the total expected costs. And then, you look at the population per bargaining unit, and then you can get a premium per person. How it gets reflected in the budget is if you go to page 49, and I'm going to give everybody the PDF page also. I'm just waiting for it to load so I could tell everybody the PDF number. I'm assuming it's going to be PDF 54. But on PDF page 54, printed back up page 49, you're going to see a table that you see in the budget. So just relating this page to Carlton's presentation, if you went to page 47 and you summed up his numbers for the active population, you'd get a projected cost of $14,349,085. I'm on page 49 of the printed backup. Bottom box. No, bottom box. So so the total cost that I'm showing, the total premium before you net out employee contributions is 14,603, but I'm just going over how you get from the numbers that Carlton gives us to that 14,603. And basically how you get to that 14,603,000 is you add our assumed additions and staffing. So that accounts for about 255,000, and that goes across all funds. It includes the employees proposed in the WPCA, new civilian director, and then 2 employees in the general fund. So after you get to that 14.6 million, you have to net out employee contributions, which I estimate based on contracts. You get to about 2.4 million in contributions. That leaves a net cost for premiums to be about 12.1 million. Then you have the HSA employer contributions. That's for one union. It's for the THEA union. And that's approximately 113,000. And then you have the out-of-plan stipends. So those are the stipends we pay employees that choose not to take the insurance, that have the option to do so. So the total cost to be divided among all the funds is $12.3 million. Now I'll focus on the general fund. The cost to the general fund that we have in the budget is $11.1 million. And then this is where I would go to the next page, which is going to be page 55 in the PDF, page 50 in the printed backup. And that's going to go over, I included information just to give everybody, I tried to give everybody all the information on one page. So starting from left to right, the first row is going to be your general fund health insurance cost. As I said, FY24 approved was 11.6 million. FY25 proposed is going to show 10.1 million. Now there's a large decrease in there for multiple reasons. First reason is reflecting the true up of the internal service fund and taking $1 million out of that. So if you back out, if you add the $1 million from the internal service fund to the 10,100,638 in the FY25 proposed column, you get about 11,100,000. Now, if you look at FY24 approved and compare it to what we had originally proposed, you'd still see about a $500,000 increase. Now, that's for 2 reasons mainly. The first reason is last year we were informed while we were doing our renewal of lasers. So lasers are high claimants that essentially our stop loss carrier was going to raise the deductible on. We went out to bid on our stop loss insurance, and we were actually able to get those lasers removed. So that's something that didn't actually happen, that is coming off of our estimate this year, and that was approximately $600,000 last year. The other thing that's also driving down the increase is there were multiple, I think about 20 employees in the active population that were actually designated as retired under 65 people. And so they got moved out of the active population into retired under 65. So that's why even when you do add back the $1 million from the true up for the internal service fund, you're still at 11.1 million in the FY25 proposed. And according to Carlton's update, you're going from what we originally posed in 10.1 million to his updates 10.164 million. So not much of a change there. And if you want to look at the impact to the budget, the last 2 columns show what I show in the proposed BOF changes page. That's at the beginning of the backup. But that's just showing the impact of this updated information and how it's going to impact the budget. So you're looking at a slight increase across multiple lines. And I could take questions about that if there are any.
All right, thank you, Frank. That was an excellent summary. Questions from the board? Mr. Curley?
Thank you, Madam Chair. And yeah, I agree. Thank you for taking us through that, Frank. I just want to make sure I got this right. So if I'm looking at page 83 of the budget book, which is the active employee benefits page, the net of the first 2 lines is the 10,100,638, which I'm seeing on page 54 of or page 55 of the backup, page 50 of the printed backup. And you're saying that that's going up by 63,847. Is that the right math?
That's correct.
Okay. And where do I see the next 2 numbers that are changing, that the 559 goes to 682, the 455 goes to 486. Where am I seeing those different departments?
Yeah, so those, I just went over the general fund, but the second row is the WPCA, so their numbers get updated.
Got
And
it.
then the third row is the FCRD / everybody
Perfect.
knows it as
Okay,
ECC.
yep. That connects the dots. Thank you. I'm good.
Thank you, Mr. Curley. Are there other questions on this insurance analysis? Okay. If board members have any detailed questions after this and want any information from Carlton, we can certainly get you those answers. But if not, we can go ahead and move on. All right. Okay, thank you, everyone. And again, nice job, Frank. Okay, so we're going to now move to insurance and claims. So this is part of the HR department, and it's on, and I'm just going to, let's just do this ahead of HR operations, since we have people here to speak on this. So insurance and claims is part of HR, which is on page 85 of the budget book. It's a separate section on the bottom. Once again, the numbers in the budget book have been slightly updated based on the latest information. And those updated numbers, I believe, are on page 34 of the posted backup, which is, wait, let me see if I've got that right. I don't have that right. Frank, do you have that?
Yeah, it's page 34, print copy.
Oh, 34 and
Yeah,
page.
34 print copy, and let me see, 39 PDF, so 34 print, 39 PDF.
Okay, great. So, all right, yep, there we go. Page 39 PDF. There's no title on the page, but it lists, it kind of looks like the budget book, lists all the accounts in each of the general fund, the WPCA, FCRD, et cetera. So it shows the proposed and the updated numbers. All right, so that is the backup, and let's see, do we have Mr. O'Connor here?
Yes, we do.
We do. Come on up. Welcome and thank you for being here.
Before Rob starts, I'll just go over, I just want to kind of go over some of the numbers in here, because I think if you look at the property insurance, and I remember, I think it was you, Lori, who had asked about this maybe in one of the other budgets, in one of the other self-supporting fund budgets, but we're seeing a big increase in the property insurance, and I know Rob's prepared to talk about that. And that's for multiple reasons. He can explain the insurance side. There was also, after the budget was adopted last year and the renewal happened, there was also an increase due to evaluation. Like I said, Rob will talk about that. And then the only other thing that may look off as a percentage increase is the liability insurance in the WPCA. There's two lines of insurance in the documents that get sent to us that go into that liability insurance line in the WPCA. And last year, I had only included, as you could see, 7,677, but it omitted another line that was for 19,000. So that was my fault. So this year it includes that other line. So that's why you see a 275% increase in liability insurance in WPCA. But other than that, I'll let Rob take it away on the numbers here and give us some better explanations than I can.
Oh, is that okay? Yeah, there you go. Good evening. Yeah, thank you for having me here. So I'm happy to talk a little bit about the insurance budget. And as Frank said, the big change last year, or this year, I guess, is on the property insurance. What happened was in 2022, the insurance company Kerma had ordered a reevaluation of all the valuation, the property replacement cost valuations. And that was started in 22. And, you know, unbeknownst to us, it wasn't actually, instituted until the 2023 renewal. So that ended up being, I want to say, a 34% increase in the values that were, now being used for the town-owned properties. It's consistent with what's happening in the rest of the marketplace. We are seeing, property insurance in general has been sort of in a crisis mode for the past year or two. And we are seeing this happen kind of across the board, where insurance companies have taken a very hard stand on making sure that properties are, properly valued to the replacement cost and, the increased cost of building these days. So that's a big, a big part of what the increase is. That in conjunction with market pricing, in general for property insurance has, again, it's in crisis. We're seeing, the reinsurance companies, which basically insure the insurance companies and end up being maybe 40% of in some cases, the cost of insurance. Those companies took on average a 40% increase in 23, which is historic. It was a huge increase industry-wide. So that really, so the town is experiencing the same thing that pretty much everyone is experiencing. I mean, I know my homeowners, I talked to my broker and he said, you're going to get a 40% increase on your homeowners this year. An example of kind of what's happening sort of, across the board. So that's really the reason for the increase. And it's consistent with what we're seeing across the board on, all of our accounts.
Okay.
I
Anything
don't know
else
if
you
you want
want
me to talk any more about that, but that's really the main reason for the property.
Okay. All right. Do you have any
Can I ask
comments on liability, or do you want to or should we just ask questions?
I mean, I guess, I'll just say in general, Kerma is the driver behind most of the budget numbers. They have been, I think, a major player. They insure 87% of the towns in Connecticut. And they have pooled rates. So, that having Kerma in the mix has, I think, helped to keep some of the increases, lower than what they might be. And I would say, the town's claim experience is a little higher than average. So, that's a factor. I don't think it's anything outrageous, but it's just it's a fact, that happens, it just happens in general. You have, ebbs and flows. And right now there's a little bit more frequency, a little bit more severity town-wide. So that's, you're seeing Kerma pass along some of that increase. So, that's reflected in all of these numbers.
Okay. Before we turn it over to the board for questions, and I don't know if this is a question for Frank or Rob, but you mentioned why it sounds like we were missing a number in the WPCA last year on the liability insurance. FCRD, we didn't have anything last year. Can someone explain that?
So we didn't have any lines budgeted. I think I have to go back and look, but as I recall, I believe, no, sorry. What I did this year was I had Caitlin create these lines in the budget so that we could charge these allocations appropriately. But it was the first year of that facility with all the partners being involved. And so during this current fiscal year, it came to my attention that it should be allocated. And so we're allocating it this year, and then we're budgeting the allocation in FY25.
Okay, so just to be clear, we didn't have a budget for 24, but we did have an allocation for 24 so that we are charging the appropriate amount to our
Correct,
partners in the
yes.
FCRD. Okay,
Yes.
thank you. Okay, thank you for that. Questions from the board? Mr. Matola?
Thank you. So you said a few minutes ago that Kerma insures about 80% of the municipalities in Connecticut.
Yeah, about 85, 87%.
Okay, what other company, the other municipalities are insured by Kerma? Who insures them? And I guess my question is a kind of a bigger question. Is there any, is there any competition in this market, or are we pretty much stuck with Kerma?
Well, it's a good question. So the other companies, I mean, Travelers is a player. Nationally, unfortunately, Travelers is not liking coastal property, and we are coastal, and that's a fact. So that really is a disadvantage in this marketplace because coastal insurance is very difficult. So that's a big factor. But Arch is a player. They have a program. It's it insures a number of municipalities. We have gone out to the market. I want to say that was 7 years ago, and did a full-blown marketing. Travelers, Arch, all kind of jumped in and tried to do what they could. What happens is the property insurance typically is not offered, and then we have to go out and buy that separately. And when all is said and done, it just stops making sense because, first of all, the cost is more expensive, and you start to lose a lot of coverage.
All right, so just, and I'll leave it. We do periodically look at the market to see if there's cheaper alternatives, for lack of a better term. Is that fair to say?
Absolutely, yeah. I mean, we do. And the other thing is important to understand about Kerma is it's a nonprofit operation. So what they do is they pool the premium, pay the claims, and then anything left over after expenses and everything is redistributed to the town. So the town does get a dividend back every year typically. So again, that's a huge advantage that Kerma has over commercial insurance companies who are, going to typically look for 10 to 15% profit.
Thank you. Appreciate it.
Thank you, Mr. Matola. Mr. Chastani?
Yeah. Hey, Ram, how are you? Thanks for coming. Just to go back to this Kerma, sort of going off of Mr. Matola's, some of what he was sort of alluding to. Let me ask you a few things. Number one, when was the last time we did try to evaluate? I know you said it, or you mentioned in your answer to Mr. Matola, it was periodically. When, do you have a date as to when it was we evaluated another company besides Kerma? And is there another company out there that performs a similar function where the town would recoup in a similar way to the way Kerma reimburses, for lack of a better word?
There's no other program like Kerma for Connecticut. Kerma is specifically Connecticut based, and they're the only pooled program for municipalities.
Okay.
So there is no other option. There are for-profit options out there that we do look at, and we have discussions on an ongoing basis each year with each one of them.
Within the last year, in other words.
Yes, we're in constant contact with them to see if there might be a change. The problem, honestly, is, what Kerma offers is unique. They offer so many different things without going into all the details. There are a lot of advantages that Kerma does offer that you're not going to get with other insurance companies. And that could be coverage, that's service, that's claims handling, all of those things.
Do you have a list of those services that they provide? Is it part of their marketing materials or whatever that you could get to us? I think that would be helpful.
I can
At least
certainly
speaking for myself
give you.
anyway, to have a better understanding of what we're getting for our money, the town is getting, and what I think taxpayers would like to know as well.
Yeah, I'd be happy to get that.
All right. The other question / clarification that, like, from what you said early on in your presentation, if we go back to the liability insurance and obviously, you know, the property insurance line that you were speaking of, and forgive me, I just don't have it separated out in what you were indicating, but it looked as though, if I recall, from what you said, they came to you / the town, Kerma did, right, in 2022. Am I right with that, with this increase you're speaking of?
So what happened was they do a reevaluation of the properties on a regular basis.
How often?
It's well, now I know it's every 3 years, I believe. Before that, it was not regular. So this, I'll be honest, took us a little by surprise because it was instituted in January of 22. And nothing happened in 22. So it was January. We had the renewal in July. Nothing happened. And then all of a sudden in 23, they got around to, I guess it took them some time to kind of put the whole program, the report together.
Why was that? Was there a lag of information? Did they explain what, number one, why there was this delay? Number two, like when you say it caught us by surprise, I'm guessing you spoke of the town. So this started in 2022, right? And in essence, the town wasn't required or asked to pay more until 23. Am I right with that?
So they hire an outside company called CBiz to do this. So to do the reevaluation.
Okay, gotcha. Sorry.
And so CBiz starts it in January of 22. I'm assuming they didn't finish it. It take them, 6 months or so. So they weren't, it was not available to apply to the July of 23 renewal, which is when the policies renew. So, honestly, the communication from Kerma could have been better on that. I wish it had been, because what happened was we sort of had this double whammy. So you had the reevaluation happening in 23 at the same time that the market was in, a free fall kind of.
When you say the market was in the free fall, and I certainly understand it, in comparison to what Kerma was asking of the town, did they provide any kind of explanation to you, the town, in writing about what transpired, why there was, and if it sounds, you shaking their heads, I'm guessing they did, is there a way we could get a copy of that as well? Just so we understand, at least again, speaking for myself, why there was this deviation. It'd be helpful, just that.
Yeah, no,
background.
I'm happy to share that with you. I believe I shared that with Frank and with Peter and a few others at the time, because this was it was a little surprising to see. We knew there was going to be an increase, but the valuation on top of the rate increase was a surprise,
Do you know if other municipalities experienced a similar situation?
I know that all of them experienced a big jump in premium on the property side.
But you don't know, and they didn't clarify to you that other towns had this similar 2022, 23 change that Kerma, in essence, assigned to the town of Fairfield. Am I right with that?
Town of Fairfield was not singled out here.
That's my question.
So
right?
they all the towns experienced a big jump on the property side of things. And Kermit did, I think, I'd have to go back and look at the correspondence, but I'm going to say that they did say, look, this is happening, statewide.
Okay, and when you say statewide, did they list the other towns that were getting affected by this? And again, is that something you could share with us?
I mean, they insure 87% of the towns in
I think you
Fairfield,
said
so
that.
that would be,
encompass 180 whatever towns. and
exactly, a
cities
lot
in
of
Connecticut.
towns,
Got it.
yeah.
Okay. All right, very good. That's it for now. Thank you.
All right, thank you. Mr. Gerber, do you have a comment?
You're up. The replacement costs, is that a defined amount in the contract, or is it the actual replacement cost that we would incur?
Yeah, so replacement costs, so each property is valued, for its replacement cost individually, and it's listed in the policy, and is updated on a regular basis. Previously, it was not every 3 years, I don't believe. They've now made it every 3 years, but yes.
So I'm just curious, why would they if they're defining what they would pay, why would they force you to define that as a higher amount? If the replacement costs go up, why do they care if they pay you less? And we have to make up the difference. What I thought I heard you just say is if you have a value, let's say a building's worth, replacement cost in the policy is $11 million. Today it would be $15 million, but they're only signing up to pay you $11 million. Is that why would they force you to reevaluate at 15?
Okay, so yeah, with insurance, if there's something called co-insurance, and without getting into detail, the insurance industry in general requires that you insure to full value. Because if you don't insure to full value, you're getting a lower premium, and people that are insuring to full value are compensating or, subsidizing that. So there's everyone needs to insure to full value to make it an even playing field. And so insurance companies, even though you insure, so to your example, a $15 million building that's insured, if you insure it for 11 and they give you a break, the cost of the insurance company to insure that $15 million building is the same, relatively speaking, whether you insure it for 15 or 11, if that makes sense. Because of partial, and basically it's because most claims are partial losses. So when you insure for 11 million, a lot of the claims you're going to have potentially are going to be under 11 million. You're going to get paid in full. The guy who's got his building insured for 15 million is going to have partial losses, and he's going to get paid in full, but you're paying a lot less than he is. Simple way of explaining. Yeah.
Yep. Are you good, Mr. Gerber?
Yeah.
Okay. Mr. Walsh?
Mr. O'Connor, from last year till this year, do you have you provided the town on all the insurance that you place or broker on for the town? Some type of list, because I get it from, I handle risk management for my company. So do you provide a list on the changes, both not only in premium from one year to the next, but also in limits and in deductibles? And do you also provide, and so we'll just start with those. That's enough for right now.
Yeah, absolutely. Yeah, we go through a pretty detailed, report that goes through all the limits, all the deductibles. It compares last year to this, the expiring to the renewal. So yes, that's all done.
Okay. Can we get a copy of that, please?
Absolutely.
The Board of Finance. Okay. But while you're here, why don't you summarize on all the insurances that you place, all the changes that went from one year to the next, limits, deductibles, types of insurance, and how it's changed?
So I don't want to go off the top of my head. I could talk kind of generally just because I've been doing this long enough to kind of know. There hasn't been any significant changes. I want to say the last significant change we made was adding 5 million of excess liability coverage to the liability coverage for the town.
When was that, Rob?
I want to say that was done 3 years ago. I have to go back. The thing that really did happen over the past few years is cyber liability was a big issue. And that's really where there's been the most sort of change, I would say. 2 years ago, when the cyber market sort of had a crisis, sort of like what's happening with property right now, we did go to the town, and the town, we went to both the IT departments at the town and worked with them to get them where they needed to be in terms of cybersecurity. And that took some time. So we weren't able to get some of the limits we needed for things like cyber extortion coverage. So there was a reduction in coverage until that could be implemented. That's since then been implemented, and now we have full coverage back. So there was this period of sort of, coverage was decreased for about a year, and then it came back to full coverage.
Okay, so it's at full coverage now. What is full coverage?
I mean, there's no such thing as full coverage. What we have is $5 million of cyber liability. Yeah, that's what the town has decided is appropriate.
Okay, if the credit cards that we take in on the town ever got released or in any way, do we have coverage that will pay for the notification and the credit services and all the things that go into that?
Yeah, absolutely. That's part of the cyber liability policy.
Did the carrier come in on the cyber liability and do an audit of our IT department and all the things that we have here in town to protect against fraud and things like that so that we got a lower rate?
So what happened was applications were completed for, we did the Board of Ed and the town completed applications, a fairly detailed application for the cyber that had a lot of information. The insurance companies themselves do their own, what they call scans of the town's, internet, and all their, whatever they can, they do their own, underwriting review. But that's the extent of it. They don't personally come in and do any kind of an inspection, if you will.
Okay. Some insurance companies are starting to do that in order to get lower rates, to be able to, and I guess it should be looked into in the coming year about whether if they did that, would it reduce our costs?
Yeah, what happened with cyber was, Travelers was a carrier for a number of years. Travelers, because we didn't have the proper safeguards in place, Travelers would not renew the coverage. So we then had to go out to the market. The pricing did go up. The coverages dropped off. We then were able, once the coverages were back in place, we did get a significant reduction in premium at that point. Surprising, in my opinion, almost, that we were able to get the pricing down where we did. It came back to below where it was before. So that was, and then since then, we've moved the coverage to Hanover Insurance, from Travelers to Hanover for another reduction. So there's been the pricing has gone down over the past few years for the town cyber. In my opinion, surprisingly, just because what I'm seeing in the marketplace with the claims, and in fact, municipalities being, sort of top of the list in terms of cyber liability claims. But we're fortunate right now to have a program with Hanover Insurance that's very, I would say aggressively priced.
Okay. Are all the buildings that we have insured individually, or do we have like a blanket limit that goes and, we don't insure every building to a specific limit, but we have a blanket limit of whatever, 20, 50, $100 million. And then if a building is damaged or destroyed or, the liability itself, we would have a blanket limit that could apply. But once we hit that blanket limit and we just happen to have a horrible year, I mean, then we have excess coverage, I presume, and whatever. But can you explain that to me?
Yes. So it's on a blanket limit, as you say. That's exactly correct. So what they do with it, where you have multiple properties like the town does, is each property is valued for replacement cost. And then you get a blanket limit. In this case, the town currently has an $875 million blanket.
Yeah.
Okay. So the advantage to that is that if there's a claim at any one property, you literally have $875 million to pay that claim. So you don't have to worry about ever being underinsured. So that's the beauty of a blanket.
Never say never.
It kind of, blankets are nice.
Yeah. Okay. And what's our excess coverage that we have?
15 million.
15 million? Okay. Have we tried to get more?
We've talked about getting more, and the town really hasn't had an appetite for it. So, but we've gotten quotes on going to 20. And we would, every year we will talk about that and get quotes.
And we have management insurance, correct?
Yes, directors and officers liability is in place, correct. And that is, I believe, 5 million also.
Okay. But I'm not talking about just directors and officers liability. I'm talking about sexual harassment by any member of any member that's employed by the town of Fairfield. If they sexually harass somebody, we would be covered both for the litigation of that and whatever the liability, if any, would be.
Correct.
At
Yes.
what limits?
So I'm just looking through the schedule here.
The copy of that, Rob?
Okay, so that actually is covered under the Kermit program. They build that into their package, which is $1 million primary and then the 15 million. I believe, I know 10 million of the excess is covering that. I'd need to double check to make sure that the extra 5 that we purchased is also including the management liability and the employment practices liability. But you've got, I'm confident to say that you have at least 11 million for that, and I'm fairly sure it's actually 16 million.
Getting back to the excess, going up the extra $5 million to 20 million, it's really not that expensive, right? Because, I've priced it out myself. I mean, it's really cheap actually, because as you said earlier with your example, most of those claims are like $1 million. Like if you saw the spread of where the claims come out, most of them are like near the $1 million mark. By the time you get to $5 million mark, it's really not that many claims that get up to 5 million. And by the time you get to 10 or 15, when you do the pricing on it, which I've had to do, the price, like if you're recommended to be 15, the extra 5 is de minimis, to be quite honest with you, correct? That's the way.
Yeah, it goes down as you go up, in higher limits, correct.
But it doesn't work. It doesn't work the other way. So if you went to 5 to 10, you'd think that, it'll be like, a third less, but it's not a third less. It's like 5% less.
It's not, but there's factors right now with umbrella and excess liability that are making it more expensive. So, it's different in the past few years. There's a lot of things going on with what they call nuclear verdicts and all kinds of stuff that's driving the cost of umbrella coverage up.
Yeah, but unfortunately, if we get hit, we get the full faith and credit of the town of Fairfield that's going to be picking it up, correct? Which I don't think we want to be in that position. Tell me about flood insurance, whether there's been any changes, and just quickly explain. There's some new members on here on how the flood insurance works for the town and the different levels that we have, and whether any of it's changed in the last year. Okay,
so with flood insurance, Kermit's program provides 10 million of flood. We have a 5 million excess flood policy that covers all the town's properties. Okay, so 15 million for flood. In the what we call high hazard zones, so any buildings that are in a high hazard zone, the deductible for those are 500,000. So in that case, we have gone out and bought insurance through the federal and national flood plan program. So we have policies on all the buildings that are in those zones have national flood coverage, which has a $50,000 deductible. But so it basically covers that gap up to 500.
And that's the way we've pretty much always had. So what we can traditionally claim is like even residential considered to be in a flood zone. We are using FEMA as our first line.
Yes, that's right.
So that FEMA policy you just talked about.
Correct.
And then after that, we have a $10 million Kermit policy.
Correct.
That's second place.
Second.
And then after that, $5 million
right
for excess.
Exactly.
Okay. And none of that's changed?
None of that's changed. That's
how the rates held on that?
Surprisingly, they've been fairly stable with I want to say 5 to 10% increases the past few years.
Okay.
The National Flood Program is starting to get, more expensive. And we're going to see that happening.
So I just want to ask you that because many, you probably are aware, many people in the residential areas have left FEMA and have gone with private companies. Just great companies out there that provide it. And they've been about 40% cheaper, sometimes 50% cheaper. I mean, I used to pay $3,000. I'm paying $1,000 now. If I had stayed with FEMA, it would be $5,000. And I'm still paying $1,000. Is that available for a municipality?
It actually is. And you're right. The private companies have come into the market recently. More so on the residential side, but we're just starting to see them come in on the commercial side, which the town would be in. So that would be something we'd look at, and consider for, the next renewal, for example.
Okay. Now, the private companies, as far as I've seen on the residential side, will not do like Fairfield Beach Road. Oh, and I don't think they'll do any of our like pavilion or anything else like that that's directly on water. There's like some yardage you have to be away from the water because they haven't had a lot of claims in a period of time. Correct?
Yeah, I'd say that's correct. Yeah, they're sort of looking for the, skimming the cream, I would say, to be the way I'd look at it.
Excuse me, Jim. Can I just interrupt for 1 second? I actually find this fascinating, and I think this reminds me of where we were a couple of years ago with the economic development. I would love to have the insurance discussion outside of the budget process, but we've got a long night, and if we can focus on the budget, that would be great.
Sure. So I'm just trying to identify because insurance is a business decision, correct, Mr. O'Connor? I mean, I could insure something for 5 million or 10 million, right? So other than what we've talked about so far tonight, to your knowledge, as you're sitting here without your information in front of you, I understand that. The limits have not changed and deductibles have not changed. Other than you've already mentioned.
That's correct. Yeah, so builder's risk, I mean, is an area that I guess we can talk about. Has been, that's a change in terms of KERMA. Okay. So thank you, David. That's a good point. So KERMA for many years had a builder's risk program that was built into their program. That has since gone away. And so now we're sort of, it's not, the program would cover $3 million, $5 million projects, depending on if it's frame or what type of construction. So a lot of town projects got covered under that blanket sort of coverage that KERMA was offering. That has gone away. And now there is no longer that program. And now we're forced to go and find builder's risk on a case-by-case basis. So, we're working on those right now. We have the projects, the HVAC projects right now for example, is one that we're working on right now. So that's a change, I guess. And that's an internal change from KERMA.
Okay. Thank you, Mr. O'Connor. Madam Chairwoman, could you make a note to put insurance on a future meeting? I don't know, maybe June. I don't know if we're going to be meeting over the summer, but to get it on so we have a full discussion about it at the suggestion of Mr. Curley.
Sure, we can do that.
Lori, can I just ask one quick one?
Yeah.
While Rob's there. So just
Jack, is it on the budget though? I just want to.
Well, I mean, sort of. I just really wanted just a little clarification on, you were talking about cyber liability, the 5 million, I think you said it was. Just help me to understand, other than credit cards, which, Mr. Walsh referenced, do you have a list maybe you could provide us with exactly what that would cover? Or is it just strictly limited to credit cards?
Yeah, I mean, it's a complicated subject, honestly, but there's a list of probably 20 coverages that are provided.
Great.
But
Okay.
primarily it's the things, it's breach.
Maybe if you could just provide us a summary.
Exactly. That was my
I
question.
think we want to,
Right.
yeah, and thank you for that, Jack. I think that we've got
That
a
was
number
just-
of follow-up items,
Right.
but
Okay, that would
yeah,
be
we
one of
should
them. All
probably
right,
move
thanks,
on.
sir. Appreciate
Okay.
it. All right.
Thank you very much. All right, so are there any other questions on this budget? Okay, Mr. Stark.
Great job, though.
On the actual budget, line 58940, workers' comp, why is this up? Workers' comp is actually
That's-
going down.
That's going to
We're
be,
not on
only on the
workers'
workers'
comp
comp.
yet.
Sorry.
So Kevin, that's the next item on the agenda.
Yeah, it's
So
the next item.
That's not for
That's-
Rob. Okay. We're just on property and liability here and errors and omissions. Okay. So any other questions on this?
Nope.
Okay. All right. Well, Rob, thank you very much for being here. Appreciate
You're
you
welcome.
coming by, and thank you for providing those follow-ups, that follow-up information. If you could get that to Frank, we'll distribute that to the board.
Happy to do that.
Thank you very much. All right. So next up, we are going to move to workers' comp and heart and hypertension, which are also in the HR budget, which is Department 1330. These are on page 86 of the budget book. And we do have additional backup materials, which I believe are on page 43 of the posted backup. And we have, is Dan here? Dan Roche?
I see him on, but we also have Ralph Melisso, who's also here for workers'
Okay.
compensation.
So Dan and Ralph, okay,
Correct.
whoever wants to take it away. If you can, or if you're, they're virtual, did I understand that correctly?
Yes.
Okay. Just, there you go. Welcome.
We can't, I'm not speaking to Larry. I'm
Yeah, I
sorry.
think Ralph's going to take the lead here. He's been working with Frank on this.
Okay, great.
Yeah,
Uh,
so I'll just provide a similar brief introduction as I did for Rob, but Lori mentioned the pages where you can see the backup that's related to this. PMA provides us with estimates for our workers' comp, heart and hypertension, and excess insurance premiums. Those are the first page, and they get allocated to the funds and allocated by percentage of payroll, which is shown on the next page. But I'll let Ralph, I think, take it away.
Pages 85, 86, Frank?
It's page
It's page-
43 in the PDF and 38 on the printed copy.
Yeah, and we're on page 86 of the budget book. Okay,
So on an annual basis, PMA does an evaluation for the town of Fairfield of the workers' compensation program, specifically the losses that have been incurred, and looking specifically at the last 5 completed years, policy years, and provide the town with averages of those 5 years as a projection for their budget on an annual basis. This year, the workers' compensation claims, largely related to the Board of Education, are up, and it's related to basically that averaging process where the year 2017 has fallen off that 5-year revolving average, and the year of 2022 has come on, and there's a significant increase or difference in those 2 lost years, 2017 being the lowest lost year in the past decade, and 2022 being relatively high, resulting for the Board of Education, resulting in an increase in the expenses expected for the Board of Education in particular. Overall, all component cost of the workers' compensation program, in addition to the losses, the estimated assessments, the H&H expenses, and fixed costs such as the excess insurance, CPA fees, and loss control services provided to the town is up approximately $74,000.
okay. Anything else, or should we go to Q&A?
You can go to Q&A.
Okay. John, do you want to
Yeah,
take any comments? Yeah.
sure.
Oh,
So can I just ask a quick question? So the number on page 86 in the book is not the correct number. It would be the number that is shown on page 38 of the backup.
The number in page 86 is the this gets allocated similar to health insurance among various funds. So that's the allocated number. And on page 39 of the backup, you'll see the allocation, how it's allocated out.
Oh, so it's,
Frank, can you correspond those numbers again? I'm sorry to interrupt, John. I'm trying to.
Page 39,
Right.
upper right-hand
sorry,
corner has the
sorry.
allocation. Yeah.
Gotcha. Okay.
Yeah.
39.
Sorry.
Okay. Do you want me to see if there's any questions? Is that what you want me to do, Lori?
Well, I
It's
asked one already.
You're back now. Sometimes when somebody
you
else
forget?
speaks, the screen
Um,
disappears.
Mr.
Why don't we?
Why is it up? I mean, workers' comp is going down like everywhere except here. And you can tell me it's because 2017 is rolling off and 2022 is rolling on, but I'm sure that everybody else who has workers' comp is experiencing the same thing. Or who's getting hurt?
Are you speaking of premiums or actual losses that are incurring?
Well, I'm talking about our budget line item, so the question might be for Frank more than you.
I think what would be helpful, and I can include it, is also showing the other funds. Like I said, this expense is allocated based on a percentage of payroll. So I think Ralph mentioned that it's only going up very slightly in total. It may be going up in the general fund because of, like I said, it's allocated on the percentage of payroll. And we've had some large contract settlements that may have increased the percentage of the total, so that.
Does it go up with wages? That could be part of it.
Yes,
Because
yeah,
lost wages is a component, right?
yes, yeah. So-
Is line 58940, is it like premiums or is it actual estimated loss experience, or is it both, or?
Those are premiums.
They are premiums.
Yeah, Ralph, yeah.
Well, we are,
we're
that's the
self-insured, so it's
contribution, that
essentially a
we're
premium.
self-insured, so
Yeah.
that's the amount that gets transferred to the internal service fund, and the internal service fund holds the long-term liability for workers' compensation payments that will be paid out over time. So this is not exactly a premium, but it's sort of treated in the general fund as a premium, and it goes into workers' comp. And this is the biggest, if you look at the workers' comp, or I'm sorry, the internal service fund balance sheet, workers' compensation is the biggest liability there because it's a long-term liability for those
So
employees.
the best answer then is that it's driven by head count and
Claims.
the increase in wages, therefore the increase in lost wages assumptions, right?
Yes,
fair?
yeah,
Okay.
and it's the allocation, and yes, yeah.
Okay, thanks.
And then just, PMA handles this for us, right? We pay them a fee too, right, Frank?
Yeah, we pay them a fee for doing this. They're our TPA.
Yeah, and that's 53,410, right? That's that line.
Correct,
Okay.
yeah.
Thank you.
I got a follow up. When we do the insurance discussion, maybe we could have a look at like what claims are actually made and see if there are ways we could think about reducing that.
Because I I don't really do workers' comp, but I think that's what we hire PMA to do, right? If our claims are going up, we do an assessment and try to figure out why, right? Why are we having more claims, and what can we do to prevent more claims? And that can be a bunch of different things that we.
Yeah, I think it's a joint effort, and maybe when, Peter comes up, he may be able to speak more to what the town is doing, on the workers' comp side to prevent claims, but it's something that, they'll assist us and advise us on.
Yeah, okay.
Okay, other questions on this budget? Mr. Walsh.
Do we get audited on a yearly basis by the workers' comp companies in regards to the premiums versus the employees and all that other stuff?
I do, I do the audit. It's through Safety National and they'll ask us basically for all the payroll. They ask for the 941s for the
Yep.
town and then they do an audit. And, I believe last year, I think it was 7,000 was returned.
Return to us?
Yeah.
Okay. Does it ever go the other way?
I mean, I haven't, not since I've done it, no.
Okay. When that money's returned, where does it go? General fund?
No, it just goes into the, I believe just into the internal.
Internal
service.
service fund? Okay. Okay. Thanks, Frank.
Okay, thank you. Mr. Curley?
Thank you, Madam Chair. All right, Frank, I just need some help walking through this here. So if I go to page 43 of the PDF, which is the PMA company's summary, the bottom line of that estimated workers' comp and H&H program cost is $2,774,900. If I go to the next page in the backup, which is this schedule that you put together, I believe that helps walk through the allocation of the general fund, WPCA, FCRD, and RFS. If you look at those numbers, they add up to $2,569,900. There's in that first column on the left, it does compare to the 2,774,900 on the previous page, but that does show a delta of the 205,000. Where is that 205,000 going?
The 205,000, if you look on the prior page, is a excess insurance premium.
Yep.
And that's carried in a different line in the budget. It's actually carried, I think, in our errors and omissions line in the budget.
Where would I find that in the budget book?
It's not going to be broken out within the line. I could provide the detail of the various insurance lines that tie up to that errors and omissions, but it's also
But the errors and omissions line, Craig, you're asking, it's a second line under insurance and claims. It says errors, omissions, and other.
Right, which has a budget of 28212, and I'm looking for the 205 that is referenced on this backup page 44.
I could be off on the, let me get you exactly which one it rolls into, but it rolls into one of those. Hold on.
And you can get back to us. We don't need to hold up the meeting, just as long as it doesn't drop. That's helpful. Thank you.
Okay, thank you, Mr. Curley. Mr. Walsh?
This question's for PMA, I guess. I want to talk about heart and hypertension. I see that the amount seems to be going up. I know it's based on claims, but aren't the claims supposed to be tailing off over time? And can you explain that? And when will they completely tail off to zero?
Ralph, you want to address that or yeah?
I'm just pulling up some information on my screen. The heart and hypertension estimate that's provided is based, again, on an average of actual payments made, as opposed to an estimate of the liabilities. And in general, your heart and hypertension program, as with any municipality, is a very volatile benefit being provided there in the sense that if an event occurs with an employee whom has a claim, then in fact you're going to have a significant number of, or a significant increase in payments for a year. Any medical treatment is significant as opposed to a claim coming in and being new. You're talking about heart and hypertension. A gentleman who has a heart attack would incur significant cost. The average, I am looking at the 4-year average of the prior years of payment have actually decreased year over year. So I don't know. I'd have to look at what you're referencing as far as an increase.
It's actually a decrease.
I'm going to show you the fiscal year 21 was 796,661. Then it goes down to 549,162. Then it goes down again to 510,143. Then it goes up by close to $200,000 to 695. And now we've slightly gone down by 9.41% to 629. So it's still hovering on the higher side. Have we been getting any recent claims? Like, is that why it went up $200,000 in 1 year from fiscal year 23 at $510,000 to increasing to $200,000 a year, starting with the next year? So that's what I'm talking about, kind of going up for the last couple of years.
So your
I mean,
number
is it just based on a rolling 5-year average? Is this simple
it's
math
based on
or
a
is this something else?
rolling 5-year average of actually
Okay.
benefits payments,
Right.
not new claims that are being incurred.
Okay, so just so everyone's clear on this is a pay-as-you-go item, unlike workers' comp.
Hmm?
So we take Jim, I know you know this, but maybe for some of the others. So it's pay-as-you-go, and it sounds like we're just taking a rolling 5-year average. So the number's going to go up and down based on what year drops off and what year comes on. It sounds like a simplistic method of doing it. I'm not sure if there's a better one, given that this is kind of going to be a wild guess of what happens. So we're taking a historical average.
Have we seen any new claims come in the last 2 years, other than the people who were already making claims?
I checked before the meeting, and there were 2 police heart and hypertension claims that were filed in the since 2007, 2019.
Okay. I'm sorry, what year were those filed?
Let me check, but it was between 7/1/2019 to date.
A total of 2, correct?
Total of two new claims.
And when is it, do you think the claims will kind of stop? I mean, because what year, can you explain, there's some new members here, so, I know I've talked to you guys about this before, but just so that the new members understand. There was a statute on this, correct?
There was.
Okay, and when will the claims kind of come to an end? I mean, I know that people worked up to a certain period of time can still file
Right.
claims.
So the statute changed for people hired after July 1st of 1996. So if you were hired anytime through June of 1996, you have the benefit of the presumption under the old act there. So
Okay, so now we're getting close to 30 years after that, correct?
yep,
So with retirements and things like that, but they can still make claims after they retire, correct?
they have a period of time of diagnosis. I think they would have up to a year. But you really have to claim it within your employment period. It has to be diagnosed, as far as I know.
Okay.
And so there was, surprisingly, I don't have the numbers currently, but when we looked at this last year, there were still, I think it was 17 firefighters that had a service date before 1996, and then there were 5 police officers that would still be eligible under the old act. We've been seeing, as we looked at these numbers, usually drop off of 2 or 3 per year, people who would be eligible.
2 or 3 a year on
Going into retirement.
17 firemen. If we do 2 or 3 a year, it would take, another 6, 7 years to be done with it?
Yeah, but so I'm looking at some of the higher dates here. They're in the early 90s. So some of these folks are nearing 30 years on the job. So the pace may pick up.
Okay. All right. I appreciate that update.
Keep in mind too, that employees who have existing claims can receive benefits of those if they're determined to be related to those conditions that they had filed on those prior claims.
As long as it's within a month of them retiring?
If they have been, so say if you got diagnosed with heart hypertension in January of 2024 and you retired in July 1st of 2024, you would have up to 1 year to file a claim from the date of diagnosis. So somebody could retire and file a claim and say they got diagnosed with heart and hypertension in January of 24.
Excellent. I appreciate that. Thank you so much for the update
Sure.
on heart and hypertension.
All right. Thank you, you guys. Are there any other questions from the board on either of these two topics, workers' comp, heart and hypertension? John, anybody?
Madam Chair, can I just
Yep.
address Mr. Curley's question?
Yep, sure. Thank you. Well, can we let these guys go if there's no more questions for them?
There's another point that I just wanted to make because you touched on it
Okay.
that I want Ralph here for, but
All right.
for
Sure.
the excess workers' comp, it rolls into the liability insurance line. So on page 86, 1.19 million in the FY25 budget for liability insurance, 205,000 of that is the excess workers' comp. And then of the 1.19 million on page 86 for liability insurance, about 205,000 of that's related to the excess workers' comp. And then the only thing I'll say is, because you mentioned it, kind of developing this numbers, Ralph and I have been talking to Milliman to see about them providing some of these projections because we have a lot of claims history, especially on the workers' compensation side. So that's something that we're working on now. It won't be done. We won't have something, for the end of the budget, but it's something that we're looking at.
Thank you, Frank. Okay. Anything else?
Yeah, just a really short one. So for the workers' comp budget, if a claim denied and somebody appeals it or sues the town, is that included in here, or that's like a separate legal budget?
I think that, so the question is, Ralph or Dan, if a claim's denied and, we're sued for it, is that captured in this budget or would that be part of?
Yeah, so the cost of litigation on particular claims is an allocated expense to the file. So if, Joe Smith files a workers' comp claim that the town wants to contest, and it goes over to the Workers' Comp Commission and it's before a judge over there, and it gets litigated, the costs associated with litigating that go actually to that file. The attorney will bill the hourly rate to the file. And, and that's how it's paid. It's not paid as a separate budget. It's an allocated expense to each claim file.
That's in that 53410, the claims handling service line?
It should,
They're in the claims amount for the town. It's part of the value of the claim.
Right. It's expense, medical, and indemnity. Those are the three pieces to an individual claim for workers' comp.
Okay, thanks.
Yep.
All right. Thank you, Mr. Penley. All right, Dan, Ralph, thank you for coming tonight.
Okay, our pleasure.
Good to see you. Thanks
Good to
for
see you.
everything you do for us. All
My
right, we'll see you
pleasure.
next year.
See you
If
next
not
year.
sooner.
Thank you.
Okay, bye-bye. Okay, all right, so we're gonna, we're still in the HR budget, but we're gonna now focus on HR operations. So we are on page 85 of the budget book, and we have Kathleen Simpson, and I think did I see Peter go by on the side of the screen? Yes, I did. All right, welcome you guys. Thank you for being here, and I will turn it over to you to take us through the highlights.
Thank you.
Button the button. All right. Oh, it's okay. I can push the button. Good evening, everyone. Kathleen Simpson, HR Director. Before I start the presentation, I'd like Peter to follow up on some of the workers' comp questions that came up, if that would be helpful.
Yeah, if they're budget related, that would be great. If it's just informational, we can
Okay.
wrap that into the other meeting we talked about.
I think it's just a very quick statistical or sort of quick information piece. I respectfully point, but from the town standpoint, in terms of workers' compensation, first off, 70% of the claims are actually on the board side and 30% are on the town side, just to give a frame of reference there. And then secondarily, to your point about what is the town doing to try and mitigate or reduce those risks and things of that nature, I know that was the question. We have been much more proactive than typically in the past. As PMA is our strong partners, they come in and they do 11 training sessions with our DPW team each year. We start in January, we run it on Thursday mornings through March. No charge, no charge. And then, and it covers all the key areas of OSHA. And then we've been working in partnership with Connecticut OSHA for what are called consultations, which in our three big areas of focus, which is DPW, fire, and police. And so that is a very, very complex deep dive into how the town is running. And those areas are running relative to the workers' comp space and OSHA regulations and requirements. So that's all done on a proactive basis, no charge to answer that or anticipate that question. But it's really intended to try and get ahead of it and continue to educate our employees, keep them in a safe and healthy environment. Thank you.
Okay, thank you very much.
Real
Right.
quick, Lori, just real quick for Peter on that. You said 70% of the workman's comp is associated with the BOE, is that right? And is that in part of this workman's comp line, or do they have their own workman's comp line?
So it's part of this workers' compensation line, but it does get reported to state annually in the EDO one as a shared expense, as an in-kind service paid from the town to the Board of Ed, on the Board of Ed's behalf.
Okay, thank you.
Okay, thank you. All right, Kathleen, you want to take us through your budget?
Sure. Well, I'll start with the Department of Human Resources is responsible for the following functions: labor relations, personnel administration, employee benefits, staff services, freedom of information requests, and risk management. Managing these functions requires the interpretation and application of federal and state laws, collective bargaining agreements, the town charter and codes, and various other regulatory and statutory mandates affecting public employment. The department also provides advice and consultation to approximately 500 full-time employees, 150 part-time, and 375 seasonals, 500 retirees, and dozens of contract employees. We have responsibility for approximately 650 Board of Education bargaining unit and exempt employees for retirement counseling and processing workers' compensation oversight and all risk management functions. And on that note, I would ask Frank to help me walk it through.
On the risk, Matt, you're talking about the risk. We pretty much went over everything on the
The
risk.
risk management we did, right?
Yeah, so I mean, I think the budget looks relatively flat in terms of what's in here. Are there any highlights that you want to talk about in terms of changes from last year's budget before we leave it to board members for questions?
Well, I guess one of the highlights too, and I have Peter talk about it, we are looking at, we finally got our money's going to be used for time management. I'll let Peter talk about that.
So as many are aware on the board, time and attendance has been a requested action or application to be evaluated by the town. So this year, having now had an opportunity to sort of get settled in the role, we've been actively meeting with two vendors. We actually tried for a third, but one of the vendors of the two ended up acquiring that third. But it is a situation where we finished demonstrations by both those vendors. I pulled together a panel of what I would call sort of critical stakeholders or end users as well to try and help us assess it. Shouldn't just be timeframe.
Hey, Jack, you got to stop interrupting. If you want to, you got to stop it.
Interrupt anytime I want.
No,
John.
you can't.
I was asking a question of
You
a
have
time
to
frame.
raise your hand
And you
use the
can call a
microphone.
point of order.
Point
which
of
is
order,
the
stop
proper way to do it in
interrupting.
parliamentary procedure. I just asked for a time frame.
No
That
one
was
can
it.
hear you.
Okay,
Ask
I'm
a
asking now
question.
formally through the chair.
Okay.
Time frame.
Raise your hand.
Happy with
that?
then.
Okay.
So can I, all right, let's guys,
Back
can
in
we get
kindergarten?
Mr.
Want me to raise
Yeah.
my hand?
You're-
Should I
you're
ask to go to the
interrupting.
bathroom too?
Yeah, why not?
Okay.
Yeah.
I'll
All
ask
right,
after
guys,
the-
come on, let's
How's
stop
that,
it.
John?
All right, let's
Stop when I feel like stopping. How's
let's
that?
let Mr. Ritchie, let's give him the courtesy of getting through his presentation or getting through his comments, and then we'll turn to questions.
All right,
Mr.
thank you.
Ritchie, are you almost finished?
Yes, just a few more brief sentences on it.
Okay.
From a time frame standpoint, the demonstrations occurred over the last month or so. Pulling the panel together, which is comprised of key areas or departments that have sort of interesting and or critical needs for time and attendance, DPW, Parks and Rec, for various reasons relative to their departmental processes and operations, library. And so we're really trying to evaluate it through a couple different lenses at the same time. And actually over the next 2 weeks is my plan to be scheduling the follow-up meeting with that panel to be able to say, okay, so what have we seen? What do we like? What do we think is good about this program? Versus for each of the vendors, what more remaining questions might we have? And let's make a recommendation ideally coming out of that. Now, the implementation of said system, if and once it's determined that we do feel like it's a go live situation, that could take upwards of, I think it's around 120 days, 90 to 120 days. There's a lot of work that's required to prep our own data. We have to get our own house in order before we can actually then, if you will, sort of turn it over and put it into their systems, be it within their respective applications. So there's a bit of an effort involved in that as well. And of course, training, and it's a culture shift, and we're super mindful of that. We've been mentioning to the vendors that part of the critical assessment that we're looking through is what is your change management plan, if you're familiar with that concept. We want to make sure that we can best educate our employees and management, because there's two critical parts to play in that as we go through this process to make it successful.
And is this implementation, and I'm sorry, which budget line? Is this sitting in the IT software line? I'm trying to understand where this is.
I think it was carried over again or reappropriated.
Okay.
Yeah.
Got it. Okay. So what's in your IT software line is that's just recurring license fees, and it's not the cost for the system you just described.
Correct.
Gotcha. Okay. I just wanted to clarify that. All right. Great. Questions from the board. Mr. Curley.
Yeah, just to expand on that. So I understand you're at a relatively early stage, but do you have any estimate as to what the cost of implementing this program would be?
It'd be premature to give a cost estimate. We're mindful of the amounts that are approved by the board, but part of the assessment is it's on a per head count basis, and we want to make sure we understand kind of what specific areas and types of roles might be part of this process. So the numbers could change. So I'd feel it's a bit premature at this point.
And that's fair. I get that, but I guess I'm trying to assess whether, is there anything in this budget for this type of program and implementation? And if so, what's that amount in the budget?
Frank, did we budget 60,000 last year? Am I remembering that correctly?
I'm looking all this up. So if you guys want to.
So so Mr. Curley, and just maybe as a refresher and for the newer board members, so we've budgeted for this system, I want to say at least 2 years, maybe 3 years in a row, and it didn't get implemented. So what we've done is before year end, when we have projects like that where we've budgeted for something and we've not spent the money, there's always a handful of items that the board will vote to carry over and allow to be spent in the following year. So I don't remember what that budget was. 60,000 comes to mind, but if that's the amount, that's been carried over for a couple of years now. So that's the money that would be available, and there's nothing specific in this year's budget because we would use that carryover appropriation.
Ms. Charles, a point of information, I don't think we budgeted for it. I think we carried it over year to year. I think we budgeted for it 1 year and they didn't spend it. Exactly. But I just want to make sure there's not been new at 60,000 for the last couple of years.
No. Yeah,
so
we budgeted
it's just a carryover from an original budget several years ago.
Correct. Yeah, what I meant to say is I thought I said it, so I apologize if that was confusing. We carried it over several years in a row. So I think we originally budgeted for this in maybe fiscal 22. And didn't do it. And I think we maybe carried over for 23 and 24. That's just my memory. But in any event, we budgeted for it once, and yeah, we don't rebudget it. We just carry it over. But Frank, do I have the amount correct? Was that the amount?
I'm still looking it up. I'm sorry.
Okay. And I that's okay if you have to look it up. I think Craig's point, and you guys can get back to us on this. Kathleen and Peter, I think it's a fair point. If we do intend to go forward next year, do we have enough money from that carryover appropriation to fund that project? And if not, based on what you know now, does something need to be added to this budget? And if it's a situation where, you know, it's a user-based thing and you might be implementing, you know, certain departments at a time, and it might take more than 1 year, you could just let us know that. But I think the question is the budget adequate to cover what you intend to do?
Exactly. Thank you.
I'd offer at this point in time, I believe there has been enough carried over. But again,
It's 75,000.
75,000. Okay, excellent. All right, Mr. Testani.
Yeah, so the 75,000, would that be associated within the budget? Is that, I know Lori mentioned the ITR software line, but is it a separate? I understand we've carried it over. I'm just trying to associate it with which line in the HR operations budget would it be?
It's in the IT, it would be in the IT software budget, but it's not in the budget that you're.
75,000 isn't reflected because it's been a carryover, correct?
Yes, correct.
Okay, gotcha. All right, very good. So for next year, if the 75,000 was there, it would fall under line 53000, correct?
Yes.
It wouldn't hit next year though, because it would.
Yeah, the following year, right?
It's already been
Yeah.
encumbered, so it wouldn't be.
It's already been
expensed.
encumbered.
Yeah.
Gotcha. Okay, very good.
Yeah, it's already been funded by the taxpayer. So the first year that it was budgeted, it was part of the overall budget, part of the mill rate funded by the taxpayer. The appropriations been carried forward. So it would, if it gets implemented next year, it will not hit next year's budget.
Got it. Thanks, Lori.
Okay, thanks, Jack. Mr. Penley.
Thanks. Kind of a general question here. I noticed that there isn't anybody, and then maybe it's just, you know, not apparent in the description, but there's really not like a risk management position, right? You guys are responsible for risk management, and, you know, maybe it's not necessary if it's just covering the liability and the property claims, although that's a pretty big responsibility. But there's other risks that we haven't even talked about today. And I don't know, it's just interesting that there's not even a position for risk management, whether it sits here or somewhere else. But I guess that's more of a comment, so not a question. You don't have to speak to my comment.
May I answer that?
Yes, you may.
I think that's a fantastic point that you're making, and it's one of the things that I would like to accomplish at some point is an internal risk management sort of advisory committee that brings in DPW, legal, HR, and others as once we figure out who the appropriate people, including the external insurance expert. So I believe it's a big gap, but this is often handled by a person either in finance or in HR. Some smaller towns handle it in HR. Some towns, you know, but I don't think it's adequate. I think it's a mistake to do it that way, purely that way. They clearly in HR, they're going to handle HR risk, I think. But when Peter has to go out and start counting, violins at Ward, I just think that's not a good use of his time. And we need to figure out a way, I think, to be more comprehensive. For example, we've identified risks that we've handled in certain ways that Peter wouldn't have really known about. But if we had all been sitting around the table sort of discussing these things, I think we would, in some sort of advisory committee, we would have a better sharing of these ideas. And then there would be a point person. We'd have to figure out who that would be. But I think it is not done appropriately yet here. But Peter's been doing a phenomenal job basically on his own.
Thank you, Mr. Gerber.
I have a follow-up to that,
Mr. Walsh. Yeah, sure. Mm-hmm.
Peter, I don't know your last name. I'm sorry. So they just called you Peter, so that's why I'm going to call you, if you don't mind. If you want me to call you by your last name, I'll do that.
It's Peter Ritchie for the
Okay.
record, but
All right, well,
don't worry about it.
I'll just call you
fine
Mr.
by Peter.
Okay. All right, Peter. Weren't you hired as the risk management person? When you came to the town, I thought you had a title of risk management something.
I can answer that. Mr. Walsh, when Peter was hired, he was hired as a assistant HR director, and the risk manager was laid off prior to that. And the risk management piece was not really appropriately picked up we thought of risk management in HR as being workers' comp and risk to employees, that type of space. And what we did to try to do a fix, Peter takes in claims that are not, like slip and falls or trees fell on my car or whatever, and kind of puts them over to Kerma, and they go take it from there. And we also loop in legal on the claim, so they know, because Bill's right, the first selectman's right. We don't always have the space for it. I mean, I'm an attorney, but I'm not here to represent the town on claims. And I do think in other places I've been, risk management on that pace, because it involves legal and claims, and it can involve litigation, has also been in, if you have a town attorney, a corporation counsel, or city attorney for bigger places, because you need sometimes to investigate it. You need to properly follow up on it, get the proper paperwork. So we've been kind of, lack of a better word, Peter does a great job. We try to get through, but it's kind of like we kind of ad hoc send it where it should go. So there is no risk manager right now in HR, that title.
Okay, but it says it as part of your current title when you sent over and put on the Google Doc form that Peter's position, correct? It says that he does risk management for the town.
Yes, he's responsible for that, but he's, we kind of do dotted lines with it. So there's real formal, and he does a lot of other things that are more HR geared that he has to do. So it is part of it.
Okay.
And it's just like FOIA, like HR, does that make sense to have FOIA in there? But we do.
Yeah, it just seemed as though the previous person, Mr. Egan, was in charge of risk management, and he was also in charge of FOIA, one person, right? And everything seemed to be taken care of. And we would get reports from him every once in a while. And then the department expanded by a whopping 50%. I mean, you went up by 50% in the number of employees, and more than that in the dollars spent on salaries. And there was no thought process on putting somebody, even though it's your responsibility pursuant to your write-up, risk management's always been in HR. And there was no thought about putting somebody and getting somebody for risk management at that point?
To answer that, and first of all, the previous risk manager, I will just say it wasn't really done effectively at all from my assessment. The previous director of HR made the decision to eliminate that position. The assistant director position was also drafted, the JD, by the previous director. When we went out to, when I first got there, my understanding was risk management was handled the way I'm explaining it, where Jim Hazelkamp was kind of handling it or not handling it, and then it was going over to legal or to our carrier. And so my opinion, it's never been handled well. And so that's all I can say. So when we're looking at what we needed, we did get increased, and we appreciate that, but we really are still drowning because we have a lot of stuff to do and deliverables, particularly with the payroll, which is something I was going to talk about. We know, I don't know if you know it's any secret, but we have a disaster in our payroll. A lot of problems. It's been very frustrating, and also it takes up, I don't know, most of our days to try to deal with payroll problems. And one of our first initiative to try to grapple with this is work initially with a Munis deep dive, which is something Peter's working on with finance, who does that piece, and the person who does the piece for us, so we can find out what's going on with the system, what do we have, what are we not doing, and from there decide where do we go from there. Do we outsource? Do we keep it in? Do we, would you hire a lot more payroll people? There's a lot of things there that are moving right now, and it is very important to clean up the payroll. Huge liability with problems with payroll, and the time we spend doing payroll stuff in an HR, in addition to FOIA, I will say, is probably taking up the time that we can't do things that we should be doing for employment, takes away times for like employee enrichment, training, working on other initiatives that we want to do with tracking systems. And we also we're going to need probably come back because it's going to be a big deal. And we're going to need to clean up our data, not just for time and attendance, but just in general. We have some bad data that for years that I'm not blaming people, but the system is there. And just like with what Megan Brandt, who's phenomenal, by the way, your benefits manager is fabulous. The fact that she's catching things and cleaning things up for the pension and is basically a one-woman show doing that between the auditing she's been doing, calculations, catching things, reporting them, and she's been probably, in addition to all the other things she provides, including for the pensions for the retirees at the Board of Ed. So I guess what my next piece was going to be saying, one of our initiatives that's going to be huge is the payroll. So.
All right, well, we're on payroll, so let's talk about it. Because I've heard the first selectman use similar terms. He said that the system is broken. You use similar harsh language in describing it. I mean, and all the liability we could be facing, which is great because all the rating agencies are all hearing this. This is great. So explain to me what the process is for payroll and how it's broken. I want to know how it's broken. And do you have some type of diagram that shows the process for this? Because when I asked the first selectman about this during the first budget meeting, and he said, you know what, Mr. Ross, that's a great point. We're working on that right now. Is that complete?
No, here we go, button. And I can also have Peter add on too, but Peter's been working on the part that HR does. And we also recognize that payroll probably doesn't belong in HR the way it is. It's just not, it doesn't make sense. And so we're just looking at our part. The other part is that flow part. It also involves finance because there's several parts, it's a two-part system. And at one point, HR got payroll the way it is right now. And I'll have Peter give you more specifics on what we do in HR. One person who just unfortunately is leaving us. She gave notice this week. So we grapple with that too. So the part of the Munis piece is to figure out the system because there's a lot of not questionable, but we can't figure out a lot of ways how things are functioning or why they're not functioning. But I'll let Peter pick it up from there.
Thank you. So Munis, as much as it is so widely utilized across municipalities, is not a user-friendly system. I've dabbled in systems. I'm an HR professional, but I tend to have an affinity for systems, which is why I tend to get exposed to a lot of these things and get asked to work through them. It's not user-friendly. The logic and the programming that is really embedded in it isn't always obvious. And so we're constantly uncovering things where we make a change in one space, not realizing it's going to affect places elsewhere. And so to your point, and to bolster what Kathleen was saying, part of what we want to do is we want to map out what is our payroll processes on the HR side as well as the payroll finance side. But the other most important thing is then we're having Munis come in and do what Kathleen has described as a deep dive. They call it an investment assessment. It's 2 solid days of involvement by HR and, in our case, payroll finance, because we need to sit in the room and literally we talk out the transactions we do from hire to retire using Munis. So it's extremely intense. It's tiring. I've been through it in a former life in Norfolk Board of Ed. But the value of it is we get to audit, if you will, or fact check what we think is the right or best way to do things. And then in the output from Munis would be a report that says, and by the way, we're getting best practices in the moment. They're like, well, if you click this button and you check this box, it'll speed up things and we'll gain some quick hits and efficiencies that way. But truly at the end, we get an audit report, if you will, that guides us on the key or major factors. Some of them will be, longer term processes that we'll need to modify over time for whatever reasons. There might be new modules in Munis that we might need to take on. We anticipate that they'll probably have some recommendations there as well. But it's truly going to be their ability to come in and teach us that much more about it. And so we should be a better processor in that sense.
Yeah, I really don't understand. I mean, I probably don't have enough knowledge on this. I don't understand why you keep trying to get it out of HR, but who does your onboarding? That's a major function for a company. Who does onboarding of new employees?
Mr. Walsh, we would still keep the onboarding and that
Okay.
input. Can
Yeah.
that's normally what HR would do, and they keep that piece. The piece is that none of us are accountants. None of us have the finance background. We're here to be for people. We don't do the money, and we're not experts at all on doing calculations, retros, those type of things. We don't, and in fact, our job descriptions don't have that. Those job descriptions sit in finance. And in other places, yes, HR does have a piece of it, but it's a piece that the onboarding, the input, and then if there's people like the benefit piece that had a baby or got married, that type of information goes in. But the fact that we're putting it in, the input, and then we're expected to keep it and then do retro payments and do all the calculations and all that piece. And then once all that is done, then it goes to finance. And again, I don't have any way even of, and Peter's much better than me, but I really can't even audit it myself. Or if someone comes up to me and says, is this is this calculation? I mean, I'm good at a lot of things, but I'm not an accountant background.
You
So if
guys
you-
know the salaries, right? And you guys manage the labor contracts, correct? Because you help negotiate them.
Correct. I know where you're going with this.
I don't
All my
think
life,
you do, so I want to.
but I want to say that if there's changes to the contract, right? Now, and I've been at OPM, I've been at other places, New Haven as well. When you make changes to the contract, we negotiate that. Then we go tell finance those changes, and we give the approval to make those changes in the system. It kind of is odd to me that we authorize those changes, and then we're supposed to put them in. And then we're supposed to do the retro calculations, which, as we know with the fire department, the firefighters, it didn't work out so well.
Yeah, Madam Chair, point of order.
Yeah, I was going to say that. So I guess I want to make sure we're focused on the budget. I know this was a question that came up, but I guess, the key, like your budget, Ms. Simpson, you don't have a request for additional resources in terms of people. And other than this carryover for the timekeeping portion of the payroll system or the, time and attendance system, you don't have anything there. So I guess, what does this exactly have to do with the budget? Are you telling us you need more resources? You have enough resources? Do you have what you need to help solve these problems in terms of people and systems? Or is there something missing from your budget, or do you just need more time to get your arms around it and you expect to come back to us? Is my question. 'Cause I think this is a topic that I think it's an operational topic, and we've heard about this, but I just want to make sure that we're focused on the budget and that we can connect this to the request that's before us tonight.
I appreciate that, Madam Chair. You're right on, spot on. What it is, we're just informing you about what we're doing with money we have with the Munis deep dive. And then we probably will have to, clearly we're going to have to come back because it's going to be a big deal, I think, to turn this around. And, once we get a new CFO, coming in, a permanent one and that type of thing, we're looking forward to having more guidance and help with this. So, but we're not ready yet. We're getting our arms around it.
Point of information, Ms. Charlton, on the first night of the budget, I was asking some of these questions and you punted it. You punted it. You told me, oh, Ms. Simpson's coming before us next week. You could ask her all these questions. And I went along with you, and I in good faith. I went along with you. And now I try to ask the questions and you're trying to shut me down. And so
I'm not trying to shut you down, Jim.
Yes,
I'm just trying to make sure that we're not, I have the same comment tonight, whether it was, on the first night of the budget as it related to the first selectmen's resources or this. I just want to make sure we're focused on the budget. So what I want to know, and I assume you do too, so Ms. Simpson said, this is what we're doing with the money we have. This is the organization we have. I see a flat budget with no changes. I've also heard that there are a lot of issues that we have and initiatives. So I think we can ask about those, but I want to just try to keep them focused on the budget and understand what impact that they have.
Well, I guess my point, Ms. Charlton, is we seem to have what's been described by both the first selectman and the head of human resources as a financial disaster. Those are words that were being used tonight. A financial disaster. Well, we're in charge of finances. We should be, we should
So,
be
so do we
extremely
need
concerned
more
about
budget
that.
to fix those things?
Yeah,
I'm with you.
and there's no raise in the
Right.
budget to correct that.
Huh?
There's no raise,
So-
you know.
I don't think.
Jim,
she said that.
I'm interested in this line of inquiry too,
Yeah.
but I was kind of, what I was interested in is, are you guys not asking for enough? And she answered it. And I think just on the budget, we can probably go on. It's 9:48 now. So I mean, I'm genuinely interested in,
I don't look
in
at the
this
slide,
too,
to
but
be honest with you.
Understand
Wow.
we're being
Asking for more.
restricted in this meeting, Lori. I don't,
No,
I don't
and I'm
understand
not
these
restricting.
comments from the other side of the aisle trying to restrict Mr. Walsh, myself, Ms. Ruggiero on asking
Point of order, you were not recognized by the
financial-related
chair.
questions. I don't care if you
Okay.
call a point of order.
Okay,
That's
hang on, Jack.
You were
I'm not
not
trying to do that.
recognized
up to the chairman
All
to
right,
decide,
please.
not you.
All right.
You're not the
Point
chair.
of order, you were
Well, let-
not
right,
recognized
agreed.
as the chair.
Let Lori decide on it.
Okay, listen, guys, Mr. Testani, respectfully, you're wrong. The last thing I want to do is shut down questions. It's very important to me to make sure that everyone gets their questions answered. What I don't want to do, though, is go down a rabbit hole on operational issues that have no bearing on the budget that we're discussing. I do understand the point. If and I think this is what Mr. Walsh had said. If if concerns have been raised about issues at the town that create risk that need to be addressed, do we have, it's our role to understand whether that's properly reflected in the budget. And so we have to ask and answer those questions. But that's what I was trying to get to, because I don't, I'm trying to connect this discussion to the budget, period. Not trying to shut anyone down. Mr. Gerber, do you have any comments on this before we, do you want to give an overview? Because I had the same question myself, and I actually thought I even put it in the Google sheet, which was, with all the initiatives that were described, I think it's just helpful for the board to understand, if they are not in the budget, what is the administration's plan? And is it because you need more time to come back to us with something? Or are these going to be capital items? Maybe you could just touch on that.
With all due respect, Madam Chair, I think I've gone through this a couple times. I think my concern with putting a big number in the budget for any of these projects is that we own Munis. And Munis has modules that we don't properly use. And, I don't know at this point whether we're going to scrap them or find something else, or whether we're just going to buckle down and use and implement things in Munis, and how much that's going to cost. So it's kind of hard at this point. If you're willing, if this board is willing to add $1 million, $500,000, I will take it. I'll put it into contingency, and we'll see where it goes. And then I won't have to come back to you, and I'd be happy. But I'd like to make another point. Every single time I come before this board and say we have a problem somewhere, I am pounced on like I'm a liar. And I have to say, with the capital planning module that I talked about, I was basically accused of being, hyperbolic. Well, we did a project. It took a lot of time from a lot of people. We found $38 million that weren't reflected on the thing that you've been looking at for years. So I just would like a little respect. If you work in town hall, or if you're an employee of this town, we have a problem with payroll. If you don't believe me, just say you don't believe me. Can we just move on? If you think I'm lying, if you think I'm hyperbolic, let's just move on. I get it. I understand. But don't accuse me over and over again, because it is a reflection on me. You're using my name. You're telling me I'm hyperbolic. You're basically saying I don't understand business, which I do. So I would just like to get some control. I'd appreciate if we had some control over these meetings where people stayed in their lanes, because this is not an operating board. This is a finance board. Do people understand what they're supposed to be doing here? Have you read, what you're supposed to be doing on the finance board? Because it's out of control.
Okay. You're right. You have stated this a couple times. I'm hearing questions, so I just wanted to give you an opportunity to comment, but I agree. Let's keep it focused on the budget. And I just, listen, I didn't raise this topic of payroll tonight. I think Ms. Simpson raised it. I think she thought it was appropriate to communicate. And I get it. I'm not raising my hand to put $1 million in the budget just in case. I think that it's appropriate to wait until we have more information. And obviously you guys aren't ready for that. And I hope that the board's not surprised if 3 months or 6 months down the road, the administration comes back and says, hey, we got our arms around this and we want to talk to you about a mid-year transfer or something like that. I mean, nobody should be, after the discussion we just had, nobody should be surprised at that.
And I would like to say, we have looked at several, for example, capital planning programs, and I saw one that I like better. But I think what we're going to try to do is we're going to try to use Munis. We're going to try to make it work with Munis because it's free. It's there. We're already paying for it. But if we were starting from scratch, I don't think we would use it.
Okay. All right. Is that Ms. Ruggiero or Mr. Testani? I can't tell. Ms. Ruggiero.
It's Ms. Ruggiero. We have the finance budget also later today for expenses, and there's no increase for salary. And there's no increase, as we discussed, for adding heads for this problem. And I do think it's a problem. It's been raised several times. And now you have said that there's exposure, which does affect the budget. So is there a way to regroup? And if we're going to have additional meetings, but to get some additional information to see what and where this should be and what systems you're going to look at as soon as possible, because it is going to impact the budget. And I don't want to sit here a year from now, because it sounds like it's been discussed in the past and nothing is happening. So we've had 4 months. Can we get something? We're regrouping on topics. If there's something that needs to be reallocated next week, can we discuss that?
We have to go do the reason I brought up the payroll is because we're going to be using some of our budget money to do that, or the deep dive. And I needed to let you know why. And also, I appreciate the fact that it's not something you're going to be able to answer next week. It's going to take at least 12 weeks out to get Munis here. And then it's going to take time to go through that process. We'll get a report. Of course, we'll share results because that's important. And then once we do that, I don't like to say we're going to need this person or that yet until we know, getting on our arms around it, seeing what it is, because I think that's irresponsible. I didn't want anyone to think that we are on the teetering of huge liability. I'm just saying payroll can cause that. And I'm not saying that finance is a disaster. I'm saying that our Munis system, it's an exaggeration, but it feels like a disaster because it's for us, because it doesn't work and we take so much time with it and it's heartbreaking for us.
Why are we waiting 12 weeks then for them to come in?
That's as soon as they can get here.
I know, but if you want to look at other software, why don't you get other vendors in sooner than that?
We are, but yeah, I'm sorry. Munis, their customer service isn't great. We've had other vendors come in and, on some of these programs, and they'll come in quicker, but we have Munis. We've paid for Munis. It's implemented.
How long has it been, if you don't mind me, sorry to interrupt, how long has Munis been in place and how long have you not been using it? And is it fully depreciated?
Okay, I'll answer. When I first got, again, I'm not a finance expert. When I first got on board, I was finding problems and I heard that HR is always making mistakes with it. And I found it was a little strange to me that HR had such heavy payroll responsibilities, because where I usually come from my other lives, that was unusual. But okay, so we have it. And then I don't know a whole lot about it because I'm not a payroll manager. So once Peter came on board, who knows more, he's better subject matter expert than I am, we were looking at this to see, and that was back in October 2022. Okay, it seems like 10 years ago. But we did try with the previous, and I don't want to throw people under the bus, we did try with finance previously, and there wasn't really a feeling that we needed that at the point, because it's a partnership, right? We just can't say, even though it's my baby, I can't just say, I get to do with my baby and I don't have to talk to you, because they're part of it. And it's also, so it's been a struggle. And I think that the previous select woman, she was very aware of it. She was trying to turn it around. We had some good meetings, we're starting it, and then in that last summer. So I have to say that Brenda Kupchak was trying very hard to help us with this as well. And it wasn't just, so it didn't evolve that way so quickly, like just all of a sudden, we're just trying to figure out how do we do this better? And the other concern, of course, is succession. We have one person that does it and no one's cross-trained. And that's a little, that's true of a lot of places.
That's the person that's leaving now?
Yes, but we're working out, I mean, luckily, we have great people, or payroll people upstairs on finance. They're very knowledgeable. We're going to help. We're working it out together. I don't want to think that the thing is going to fall. We have a plan. We're going to be okay to get through the rollover. So we're doing our best to do this. So things aren't, I want to make it think that, oh my gosh, the whole thing's going to fall apart. No one's going to get paid. That's not it. So good point. I think Munis came 2013.
That's fine. It's not important for today. It sounds like you're looking at other solutions anyway,
Yes.
which it sounds like might be the answer. So
Yeah.
I don't have any other questions
Okay,
right now.
all right.
Okay, thank
Just-
you.
Just Lori, just can I?
Yep, sure. Yep.
Just so a minute ago, Kathleen, hi, by the way. The budget, sorry, the current operations budget, right? You alluded to it by saying that some of the costs are, and I'm paraphrasing, I'm just trying to get back to Lori's point of exactly what you have factored in, if anything, into this current budget for this payroll initiative, which, as we've been discussing tonight, is a big, for lack of a better word, albatross for the town. So what is in the current budget allocated for that purpose, or is there anything? Because you did reference that a few minutes ago.
Yeah, I think it's $12,000 that we have roughly for this Munis deep dive.
When you say $12,000 reference for the Munis deep dive, where would that be in the budget
Frank,
allocation?
can I help?
Do you know what line it would be under, Frank? Just for my own, it sounds like it might be.
It's fees and professional services, but
professional
I think
services.
I'll let
So,
Frank.
out of the 65,000 for that line, that's 53200, 12,000 of that is for this Munis deep dive, is that right?
I'll have verify.
Yeah, so it could be paid for out of fees and professional services. I think at the time it was originally looked at, there was a capital line that came under budget with some software that was related to some software implementation that could have been used to fund that.
Well,
That could be funded out of fees and professional services budget for human resources is a little bit fungible. It's not related to like certain vendors because different things pop up throughout the years that they need to pay for. So this could be something that they paid for out of this year.
Sure, I understand that. Help me to understand that line, Frank or Kathleen, whoever's got the answer to it. Because if you look at that line, okay, so fiscal year 23, the actual, right, for fees and professional services was 33,260, which certainly seems out of whack compared to the other years. So what happened in fiscal year 23? If that's an important line, right, for whether we're doing, the Munis deep dive or whatever, why was that line so depleted compared to some of the other years? And is 65,000 enough? So the fiscal year 21 actual, 81,266. Fiscal year 22 actual close, 78,254. I mean, a fairly significant reduction in fiscal year 23 actual. And then we're asking 65, right, for fiscal year 24 and 25. A, is that enough? And B, why was it so much less in year 23 actual?
I don't think I'm the best one to answer, is it enough? I think that I would, the Human Resources Department could speak better to that, but I could give some color on the prior year actual. So, FY 21, FY 22, and I had mentioned this before, but we had used SGR, which was a recruiting agency, to do headhunting for some key positions in the town. I know I was one where I got hired through that headhunter, and I believe the building official was another one. Also, too, I think that we have a labor relations specialist, and I think the prior HR director in those fiscal years was utilizing some outside counsel to help negotiate some of the contracts, and I think the labor relations specialist has offset some of that. Like I said, it's a best estimate for some of the things. There's some recurring things. Drug testing is in here. Some, recording fees for if there's anything with the union is in here. But there are other things that just pop up that from year to year may be different. And so this number is real. Like I said, it's not tied to one specific vendor. It's going to be fungible for different things.
Right, I understand. It's a $30,000 difference, Frank. I mean, it's a little hard to rectify that. I mean, it's not,
Yeah,
we're not
like I said-
talking in the scheme of the whole town budget. It's not, but still, I'd just like to understand a little bit more.
Yeah, like I said,
Why
some
there's that
years,
differential.
some years you may have, some years you may have a requirement that requires more. If we don't need a headhunter in a given year and there's nothing going on as far as besides the usual run-of-the-mill stuff, then you get anomalies like that.
Let me ask, while we're talking about budget items, 58-120, which I know is Mr. Walsh's favorite subject, travel and meetings. I just out of my own curiosity, so fiscal year 22, $55, right? Zero in fiscal year 23, and we're up to 2,600 in the 24 and 25 budget. I understand it's a 0% change. I'm just wondering why there's 2,600 in there, and does it include meals? Because I know that's going to be one of our questions.
Right, for travel and meetings, we put in more, first of all, there are going to be more meetings. We're no longer in the Zoom mode anymore, so we have to go to the labor board.
Yeah, I understand.
So
Sure.
we have to travel to Weathersfield if we have hearings, because the SBMA and the SBLR are there. And we also may have to travel more. That's the thought process, is that we'll have to go to more places live than ever before, because everything before, we had convenience of doing most hearings. Sean knows too, that we would do a lot of those, remotely.
It's not really technically that connected sort of to the travel and meetings. I just wondered on the advertising line, which is 55400. That looks like, Frank, that's fluctuated quite a bit. Obviously, when we had $0, which doesn't make sense to me in fiscal year 23, and the budget for 24 and 25, 6,400, which is fairly significant increase from the fiscal year 22 actual. So help me to understand that line a little bit more, why we had 0 in 23 and then 6,400 in fiscal year 24 and 25 budget.
If I could, just on those, 6,400 was the budgeted number in 22, 6,400 was the budgeted number in 23. So you're also in this book.
Where are you seeing that, Dave?
Well, I'm pulling up of the fiscal year 23 approved budget, which has the approved budget numbers. So you're looking at the actuals.
Right.
So the same instance occurs with
I got you.
with the 65,000. Fiscal year 22 is budgeted at 65. Fiscal year for that other item, 65,000.
You mean
for what we spoke about earlier, the fees and professional. So this budget book. Okay, that's Frank's fault on the echo, sorry. So similar to the fees and professional, You're looking at the actuals.
Right.
And so if you go back to the
The
approved
approved,
budgets,
okay,
they're,
gotcha.
they're higher and these are
Okay.
the reported actuals.
Okay.
So what's happening is in the subsequent year, they're rebudgeting at the higher number, if they think that there's a possibility to spend there, but they're not just blowing the lines out at the end of the year or anything like that. They're spending it only when they need to.
Okay, so let me just, while we're on that topic, David, let me go back to this fees and professional services line, which Kathleen, stop me if I'm wrong, that's where this 13,000 came in, right, for the Munis deep dive? Am I right with that, on that line? Is that right, Frank?
It could come from there. There was, like I said, there was another funding source in the capital line item that we also identified could be a potential use for this.
Okay, I'm asking because it sort of goes to Ms. Rogerio's question, a little bit earlier, Kathleen, with regard to, I think, everyone's kind of theme about what this potential payroll issue could cost the town and how, I mean, I know Mr. Gerber mentioned, putting $1 million in contingency. I guess my concern, and I'm sure some of the other board members, is what is it, I guess it's kind of hard to estimate from what Peter was saying at this point, what it may cost the town. B, where would you anticipate this coming into your budget? Perhaps not this year, maybe not even in the next fiscal year, but where would it be in phase and professional services for the changes in the payroll? It sounds like it may have to be a shared expense with finance based on what you were saying. So do you have an idea of how you would allocate the budget for that piece of the HR department? Whatever your expected expenditures may be, I understand you may not know right now this moment, but do you have an idea of how you would allocate the payroll expense? And again, sharing it, I'm guessing with finance, right?
Yeah, so I'll take a crack at that, and then if anybody else wants to fill in the blanks there. So the million sort of reference, which is just I think that the $1 million reference it wasn't specific to payroll. It isn't a specific number. I think it just speaks to more broadly software, personnel, the whole budget and administration initiatives as we go through areas and try to address things. And I think it was just noting that we're still new. We're still going through everything in town government. And there's an intent to, at some stage, come back. And, I think if the budget were to have been published in June or July, it might have had all of those things. But I think from a timeline perspective, it wasn't published. Our deadlines didn't line up with even going through enough departments and being able to come up with proposals. So payroll is certainly an item. There is the Munis piece. It is absolutely aggravating that it takes 12 weeks to get them, but they are the core software that runs the finance and a lot of functions for town. So and I do want to address payroll because I as interim CFO, the finance department falls under me, and we have between all the departments in town, I think a lot of long-term and talented staff, and we have systems that are in place. What seems to be happening is things that are, it's not just HR or finance. Some of it lies out in other departments, and the Munis piece that we're speaking of is that we're calling the deep dive. It's not just the software. It's somebody from the outside helping us with the flow. If an employee or a set of employees in either a department or multiple departments have been doing something a particular way for a long time, having an outside set of eyes objectively look at it is going to be crucial. So it's hard to say we're going to need a payroll person here or an HR person there, but hopefully they're going to help us in that. And at the same time, because Munis is the software that we're using, they're going to be able to show us things, all of the employees, that may not even be used. As an example, we found that with the Capitol. We own the Capitol mod. We're in the middle of a demo. Oh, by the way, we actually own it, right? So they'll be able to help us with that.
So David, just so when you say someone from the, you're speaking of someone from Munis, right? Just so it's clear in my head.
Correct.
Okay, gotcha.
Yes.
All right. So the bottom line is there's no way at this stage to figure out exactly where in the budget these potential changes to payroll, whether it be on the HR side or the finance side, how they would be, A, how they would be in the budget, and B, like what, like, would there be a line item is what I'm trying to get to that would be associated with whatever costs the town may have. So right now, right, just to carry this out one more minute, the Munis expenditure is in IT software, right? I'm sorry, fees and professional services, 53,200. So David, if I understand what you were saying correctly, after this Munis evaluation, for lack of a better word, we would then decide, we meaning the town, or have a better understanding maybe of exactly how much it would cost, A, for these payroll changes, and B, how it would be allocated in the budget in terms of expenses. Is that fair to say?
Yeah, I think that's fair to say.
Okay, great. Thank you. I just want to get a better understanding of how it would affect the budget. I appreciate that.
All right, thank you, Mr. Tisch. So it sounds like, if from what I heard, we have enough money in this budget to do the initial valuation that we need to do. When that initial valuation is done, the administration will come back with a more fully developed plan. We don't think that's going to be a year from now in next year's budget. We think it's going to be sometime before then. And at that time, you'll have the analysis and we can talk about funding for that. Is everybody okay with that? All right.
Perfect.
I'm sorry, did Mr. Walsh, do you have a question?
Yes, I've got a couple questions. Peter, I was going to get back to you. We've got a long circle, so I'm going to try to get back to you now. This time and attendance stuff that you're working on when trying to get, you seem to say it was going to be for the town. Then you said it was going to be, you said something about it applying to public works. What is it going to, it's going to apply for the whole town, right? That's the way it's always been sold to this body when we gave the $75,000, that it was going to apply to the whole town. So can you explain to me, because I heard you say something about public works and a rollout or something like that. So, I mean, I understand rollouts, but I just want to make sure it's going to apply to the whole town, right?
The concept applies, excuse me. The concept definitely applies to the whole town. Part of what I may not have been clear in when I presented it is DPW has a very strong need for it currently for two reasons. One, they literally have a punch clock, old school, take it out of one side, chunk, put it in the other side. End of the day, reverse the process. And then there's a reconciliation and manual approval process that then goes up through the chain on the DPW side. Secondarily, they have a unique circumstances when they need to clock their time. They have inclement weather issues. They're out plowing the roads and doing all those wonderful things that they do for us at odd hours whenever necessary or needed. So I think DPW had a very important part to play because we need to recognize those are two really interesting challenges that need to be addressed by this system. Can this system do it? Next group, and this is where I may not have been as clear. I brought into the panel, I wanted the library. Now they're very different. They're not out obviously doing things in the middle of the night in the roads, but they have a very fluctuating scheduling kind of circumstances, and they have sort of a seasonality to them to a degree based on the school years, et cetera. And then we look at, and it just jumped out of my head the other, Parks and Rec, thank you. So Parks and Rec, I wanted them on the panel because they clearly have many employees scattered throughout the town geographically, which is similar to DPW. So that's a problem to be assessed and evaluated. And then lastly, the seasonality of the seasonal hires, which as we've mentioned, or as Kathleen described earlier, it's about 375 seasonals are brought in. Some are maintained throughout the year, but during our May to call it September, October timeframe, we have 375 seasonals. So they're sitting in lifeguard chairs. They're teaching tennis, they're on the golf courses, so many unique circumstances. So I wanted to factor that in to figure out beyond the Peter Ritchie who sits in his office by and large all day and goes in and out of the same building, right? So I use different groups, and that's what I really meant to
But
explain.
those are individual, and I appreciate that. That shows complexity in the stuff. But the simple person, I'm just going to take a position. Secretary A in town hall comes in, gonna have to use your system, right? Your new system, and puts in a time and comes in right at 8:30. That's the reporting time. Leaves at 4:38. We're paying her overtime, right? Or him or her overtime? Because they're punching a clock. I mean, there weren't certain number of hours, right? We're paying them for the extra time, right? Why wouldn't we? Why wouldn't we pay them for the extra time?
We'll pay them in accordance with FLSA requirements and whatever contract obligations we have. And that system should recognize that.
Yeah,
and we know that.
yeah, so we'll just keep track. So if they're working on something, their boss wants, or so whoever they report to wants them to work, they work and they get paid for it. Right? I just want
Absolutely.
to make sure that's the what, because I just want to make sure I'm understanding the system
And
that
so
you're going
let-
to buy.
Let me try one different way of saying it. I'm bringing onto the panel, we have all the HR team that's also part of it, for reasons that solving for the middle of the parabola, if you know what I mean, in terms of complexity, that's the easy one.
Yep.
Peter Ritchie comes in, badge in, badge out, if that's what we decide as a strategy and how we should approach it. It's the outliers. That's where I really wanted to be able to solve or evaluate a system for, because that's where we have the hardest problems and challenges. And so that's what I was trying to describe is I'm not bringing, the middle is the easiest.
Okay.
I don't want to solve easy. I need to solve the whole parabola.
Okay.
If I can offer it that way.
And you mentioned, it was mentioned earlier, I'm not sure whether it was Kathleen or you, Peter, some problem with information maybe not being correct over the years and stuff like that. But your department handles all, like someone's sick, reporting sick days, making sure that they don't go over a certain number of sick days per union rules. You guys keep all that stuff. So that's what the attendance part is for. Is that correct? Like vacation time and personal days and whatever, like comp pay or whatever it is. You guys all keep track of that right now in your department, correct?
The information is fed to, it's actually provided by, I'll call it a department representative, an administrator typically. They will key that in, and that's what's kept and recognized in Munis.
So you're the
Munis
keeper
is
of the record.
source of sys- is
You're the
source
keeper of those records?
We have a part to play in the system, sure, in maintaining the accuracy of the system.
Okay. So then you're going to take all the information you currently have and roll that into this time and attendance system.
There'll
The
be
information.
some sort of technological solution that way.
Okay.
It could be done, it's done at the local level, meaning within the department or some other method, but we're going to fine tune that.
Okay. I've been going through some of the departments with their year-to-date budget in order to see whether you're really utilizing all the funds in the budgets, right? So I started this last night. I went through every department, so I'm going to continue here. So this is the real first department that it would apply to tonight. So when I look at your year-to-date, because we got, what do we have? Almost 3.5 months, maybe slightly less than 3.5 months left in the budget. Okay. So some things jump out at me. So, and I just want to see, because maybe we can reduce or add to your budget, either one. You know what I mean? Up or down, based on how you're spending money. So the first one that hit me, and because it's a negative number, it shows up in red. Frank, thanks for doing that. I appreciate it. Is part-time payroll, $3,815 in the red. There was no approved budget for that at all last year. There's no approved budget for that for part-time, any employees in this year's budget, $0. What's that for? Because you've got a 50% in your number of employees. What's the part-time payroll? And who's in that? What's the position? And why are we spending money on that line? And how much money do we need in it next year? This coming year in the budget?
Currently, we have a part-time administrator assisting us. We had some money, and I'll have Frank, I did go to Frank and asked him, do we have money for a part-time person to assist with a very high-level special project? It was involving a FOIA request, which was, there's thousands of documents in finance. And finance would have been operationally killed, crushed, if they had to go through all this stuff. And because FOIA lives in HR and we have to comply, I talked to the CFO and the interim CFO and to the budget director and said, can we get some help for this special project? And additionally, now that we have our HR assistant leaving, we may need that person to stay on, so we may have to go, that we have that money there for that because we don't have an HR assistant right now. Or April 1st, after April 1st, we won't. So that was, we did have money, and it's a critical need. And so that's why there's a part-timer right now assisting that with that position, with this work.
Okay. Hold on one second. Job description, right, for this part-time person?
Yes, I think it was put in the packet.
Yeah,
Okay.
it was. So, I want to ask you a couple questions about that because I read through it. It's quite extensive. It's one of the most extensive job descriptions in your entire department, actually. I mean, if you go through it. But what also concerned me is that what's the OT line for? Why is there overtime when there's none budgeted for, or there's none budgeted for this year?
Overtime line, this is a temporary position. It wasn't intended for a full-time ongoing. It's a temporary position. And it's shared, it's also because there's a finance piece to this, we're giving it basically a finance HR position with a lot of duties because we have some heavy projects right now we have to meet to. And the main one was this FOIA request because it requires some auditing. It requires extensive review and duty. And that's just not, I'm just not going to blame the FOIA piece, but that was the main reason we said we need help. As we're just getting underwater with these requests. And again, to load on finance with that job, and it is quite extensive, would have been, it would have been probably, again, it would have shut them down and we would not have been in compliance.
Okay.
We want to make it extensive as possible to be able to utilize it as flexible as we can for the temporary period.
Okay. Interesting. FOIA requests. How much time is spent on that on a yearly basis?
Yeah, basically our HR paralegal, which we wanted to use for other duties, spends probably 90% of her day on FOIA.
Okay. But Peter, you spend time on FOIA, right? Because it's in your job description.
I provide some oversight to the FOIA activity that our paralegals focused on. But by and large, and also Kathleen has a part to play in that, given her expertise in that space.
Okay, so 3 of you are working on FOIA right now?
That's not correct. Okay. The main gathering of records, redacting, and that type of thing, which you have to do, goes to the HR paralegal. Plus, she has to go to different departments to get records or they forward them to her. And so she has to go through all that culling through. We're there, and then we also get the assistance, and if we get a real red herring with legal, Peter and I are there to help her with what's an exemption or what do I take out, and helping her with that, navigate that. And also help her to try to organize it because we also, you get FOIC complaints. So we're trying to, again, organize that, get that together, prep for those. So it's one of those tasks that it's hugely time consuming. That's what it is. So no, Peter and I are not, I do jump in and I do copy and redact. Peter does too. But it's basically, and we do have next requests, which we do have now for the FOIA, which is helpful for tracking and getting the redacting and getting the exemptions cited when you got to take out information.
Okay.
So that's been helpful.
Okay, so basically, from what I'm hearing is we have one paralegal who works 90% of the time on it. We have now one part-time person. Is the part-time person responsible for the overtime as well, or is that another person in your department who's doing overtime?
We've had overtime by both the HR assistant and the HR paralegal to do.
Okay.
Okay. There's been a lot of things going on, including renovations, and we had to move and we had to clean up, so that caused it too.
I just want to close out on FOIA. So we have the two people now working, you said right now, right? Are they both working now? The paralegal and the part-time person on this
They're both
special
working.
project?
They're both working now.
Okay, and then you both oversee them on the FOIA requests as well?
On both things, Peter and I have supervisory oversight over both these individuals.
Okay, I'd like to move on next to another area of your year-to-date budget. Well, one thing is, I think I've gotten the answer for, but I just want to confirm it for you because it was over by a fair amount. So on the property insurance line, I think we heard from the gentleman earlier this evening who does our insurance, that property insurance is up because you're over budget by $43,600. And has that number been properly taken care of in the budget now?
Yeah, so that one is over, but errors and omissions and I think liability is going to come just in, but there's an offset on the errors and omissions line.
Okay.
So property came over and then errors and omissions came over.
Okay. And then I've been asking all the departments starting with last night and it's going to continue I'm trying to get a handle on how many cell phones we have in the town. How many cell phones, because is all your cell phone expense on this communication line 55300? Because Frank gave me a response today in regards to my question in regards to like, where does it hit? I specifically had each department so that I could know where their cell phone bills hit. And there was, Frank's response to that was it normally hits communications. However, it could hit other budget lines in certain departments.
In this instance, it would hit. So my response was it would hit communications. If there's no communications line, then that would be the next line. But in this budget, it would.
Fees and professional services, you said, if it doesn't hit communications.
It could if that was a general statement.
Okay.
But in this budget, it would hit communications.
Okay. And I appreciate, Frank, you supplying, because I asked you whether the town had a policy, and we got a technology policy today. And I took a look at it. So, and it appears under mobile phones and devices that who gets cell phones in this town is determined by the department head solely. Doesn't go any higher than that. Department head can determine who gets cell phones. So your line on that currently is over by 287%. So your budget last year was 650. Your current spend that with you still have 3.5 months to go is $2,516.65. Yet in this year's budget that we're talking about this evening, you go back to $650. So how many cell phones do you have in your department and who has them? And, like I asked the police this last night, it's part of their standard equipment. Every police officer has one. Fire, they went through that. So I would like to know in your department, who has cell phones for your operations team, which is, I think, the 7 employees that you have? 6 employees. How many of your 6 have cell phones?
6 people, 6 of us have them. We all have cell phone. No, Ayana won't. Ayana did have one, but she's leaving. So everyone gets a cell phone.
Why would that happen?
Because there's email on there and there's email. We want to separate. One thing is under FOIA. If you use your personal cell phone for work, it becomes the information you put on becomes FOIable. The other concern is that if for communication, we have between the email and the phone use, we also want to make sure that we don't corrupt the town system with which, I'm sorry, I'm losing my train of thought with viruses, sorry, with viruses, and it's a tool. And I want people to be able to reach each other for email and to be able to have access to it for after hours. And if they're working, oftentimes like me getting information like tonight. So I believe in giving people the tools they need, like if they need a laptop, if they need, whatever devices they do to do the work properly, and also not get involved with mixing the two. And also, I think that you might have to be required to pay people for their use of their cell phone, their personal cell phone. I just think it's cleaner, and I think it makes it a better communication, so people have all on the same line, and that's why I do it.
So under that theory, then everybody in town hall would have a cell phone.
No, I think that our jobs are specialized and require that. I don't believe that. I wouldn't agree with that.
Oh, your paralegal needs one? Is that correct?
Yes, she does.
Okay, seems like a lot of cell phones. And why didn't you increase your budget line? Why is it still 650? Why wouldn't you just, if you know every one of your people is having a cell phone and you're the department head and you can make that decision, which you have, I might not agree with it, but that's your decision. Why wouldn't you properly budget for that in this budget?
Well, I think it was probably looking at this now, 650, but presuming that would be, well, I don't have an answer. It's some oversight on my part.
Okay, because it's probably going to be going over $3,000. So it's something that needs to be looked at. Is there any other lines on your budget that you haven't really looked at that might be going up as well?
Not that I'm aware of, but I thank you for pointing that out.
Okay. Your office supplies, it's not a lot of money, but I just want to know whether you're over on office supplies already with 3.5 months to go. Is that still going to be going up? Should we be raising that number as well? Is that going to be consistent, or was there something special about this year that caused, like some of the departments have been able to explain, like, there was some piece of software Frank bought up last night that was an extra certain amount of money, and that's why it blew the budget.
Well, basically, the line went up because the number of FOIAs. And we have the volume of copying and things we have to get for FOIAs. And it's a lot of paper. And also, we also had, part of what we're doing now, we're in contract negotiations, which creates a lot of paper for proposals, binders, that type of thing, to get ready and to have, it's just a lot of paper for that.
And that makes sense. I agree, that makes sense. But I guess, why don't you have a revenue line for then the FOIA dollars that come in?
It's not in the HR department. We do have one, I believe.
Okay. How much do we make on FOIA? Can you show me where that is in the budget, please?
I think it's a minimal number. I have to.
Is it in finance, Frank? I mean, I remember we saw it last year because it was the first year it was in the budget.
Yeah,
And
let
when
me,
we get
let me, if you
Okay.
want to go on to
Yeah,
another
I'll go
question,
on.
I'll
Yeah.
take.
I can say though, we just got electronic documents that are available electronically. FOIC has ruled that we have to give those for free. You can't charge for electronic documents that you already have stored.
So you can't charge for any of the search fees or the administrative fees of putting.
Not
that
if you have
search
someone
together.
that their job is to do FOIA, because that's part of their job. And you can't charge, I mean, everyone's job is to do FOIA if you're a government employee. So you can only charge so much. If someone wants a special project, like a report to prepare, you can charge. If they want it expedited, they charge for the overtime.
Okay. But if we didn't have a FOIA person, we took all your titles away for FOIA, having any responsibility to do with FOIA, could we get a third-party company in here and charge for that, and then charge them for whatever their fee is for that FOIA search to come in?
Not under FOIA, the rules. You can't charge for a FOIA, you can't charge the requester for an outside party to do the search for them or.
Oh, okay.
prepare
The reason I was
records.
asking is you said that if we have a position that you can't charge. But my question, I guess, is if we didn't have a position, then we can charge?
No, I'm sorry. I'm just saying that it's harder to argue that you're charging for someone's time if it's in their job description to do FOIA. But technically, basically under the FOIC rules, the FOIA rules, that you can, you don't have to shut down your operations necessarily. And you can give out FOIAs if they ask for 1 million documents, it could take 1 million days to give it to them. But you have a duty bound to be reasonable and continue to provide the information, even piecemeal. So department heads often, it's frustrating as it may be, we may have to ask them to go through in the basement and call up records, and we can't charge them for maybe going in the basement and pulling up boxes of records out.
Okay. All right. So we basically don't make any money. It's a money loser.
It's not a money maker.
It was 1,000 in FY23, year to date in FY24, it's about $860 about.
Do you think it covers the paper costs?
Not under FOIA, no.
Okay.
It's basically not meant to be a moneymaker for a municipality. It's supposed to be about it. And the more digital we get, the easier it's going to be for people, the transparency. If we have things up online, that will be the easy part. If we get rid of paper, we have things available, people, public can see it.
Okay.
Solves a problem.
So in you supplying your job descriptions, there was a job description that I could not find in the budget, and you now explained it, this part-time person. How long ago was this job description created?
I'm going to start this, maybe 3 weeks ago.
Okay.
When I got the request and we kind of like had a meltdown about how we're going to do it.
Okay. I think Mr. Testani started asking about it, but he didn't really hit the question I wanted to ask, which was, in your line for travel and meetings, you explained how you need to go up to Hartford now and you need to have, eat up there. I totally get that as an expense. But is there any funds in your travel? And I've been asking every single department the same question. Is there any funds in your department for your category for travel and meetings of $2,600 that's for food for your office?
No.
Okay. So I guess
I should say we do provide coffee and water for onboarding people when they come in. We do supply that, but we don't have.
So for a new employee coming.
New employees, we have, they're going to be there for the day. We have a bottle of water and give them
Okay,
if they
but
want
it's not
coffee.
it's not for your staff, right?
No.
Okay. So in going through this part-time description, one of the responsibilities for that new part-time person, and since that's brand new, I presume that it must have been discussed, and Mr. Becker's in here as well for his position because it supports 2 departments, correct?
The point was to try to help with finance, yes. It's supposed to support two departments, but on my dime.
Okay. Well, that doesn't seem right, does it?
Well, we're going through a big transition, payroll, and we thought that also, that person.
Well, what is the question here? What's the question?
So my question is, I'm getting to it right now, is one of the job descriptions is to coordinate catering and logistics for Mr. Becker's office, the chief fiscal officer, catering for him, and the HR director's events. That's what it says here on page.
Right. Okay. Well, I can tell you what that's about. That's about Juneteenth.
The last point says to cater for you, Mr. Becker.
Okay.
And for your office.
That's not for our office. No, we have an event coming up. 2 things: Pride and Joy, and we also have Juneteenth coming up. And I'm taking money out of my budget, the $6,000 for training for programming, and we're not going to supply catering for that. We're not going to have, we'll have a food truck where people can buy their food. Catering is probably a bad thing to have in there because there's no catering, but there will be programmatic things to have speaker, maybe culturally appropriate music for the Juneteenth. So we're thinking that that type of person can logistically, and that person right now is helping us with putting that programming together because I don't have the bandwidth, and it's really, really important to have these events.
Okay. And then you said this is a temporary position, so you are planning on using this person for these upcoming events? Or are they going to happen before the end of the 24th?
You have to, we're flying on the seat of our pants with this. We should have been planning this last year. We just started planning it. And we're trying to get something together quickly. So the idea, again, catering spot, it's in the EA job for the EA for the police department. So I think that was thrown in there because they do have catering events at the police department that they need it. It's probably a bad word there, but the idea is that planning for events is something that we do for trainings for employees. We don't provide catering for them.
Another position, another one of the bullet points is to prepare travel arrangements for Mr. Becker and for you.
Traveling, that's an illustrative duty. This was taken from, okay, can I please just finish?
Sure.
It's illustrative duties, doesn't mean they're doing them all. If there are travel arrangements that had to be made, if either the CFO or temporarily, I'm not planning on going anywhere, and I don't believe Mr. Becker is, but that was taken again out of the EA job description that's on file for the permanent position for the police department. So I have no plans on traveling, and I don't plans on anyone doing, but those duties were taken out of there, so.
All right, Mr. Becker, did you review this? Do you know the job responsibilities that you're going to be supplied, like this kind of stuff?
You know, HR director was making it broad. Okay, as she said, she pulled some of the duties off of an EA job description. She was trying to fit it in, to get this in and make it broad.
Okay.
No one's booking me plane tickets.
Well, that's our
something like
question. Do you
that.
plan on flying around as part of your position? Because it almost seems like this is like a travel agent.
No, and you know, again, and this goes to the thing the other night, welcome to the gotcha hour here. Don't worry, I'll be booking my own travel arrangements, whether they're personal or business. There are no business, but even if they were, I'd probably pay for it myself, just to not have to listen to you comment about it.
Not a problem.
All right, listen.
Let's
You
move
know
on.
what?
We're done. We're done with this.
I mean, this is getting silly.
You're not asking
Listen.
budget questions.
Yes, I am.
No, we're not asking,
I
no.
don't know if I'm gonna- I don't want to fund this position, to be quite honest with you, John. Oh, stop it, John. Oh, stop it.
I'm not asking for it to be funded.
Yeah.
Listen, folks, if we know what this is, listen, if we hire somebody, particularly if they're a union employee, okay, the job, we're not going to be able to ask them to do things that weren't in the job description. So if the job description's broad and it picks up things that person might do once in a blue moon or never do, what is the big deal? And what are we wasting time on this for?
Because you get
it's getting
concerned.
11 o'clock at night and we have
You get
multiple.
concerned about that, Jim?
I
Something
do.
like that?
I do.
Really?
Catering? John,
we
it
have
says
to go
catering.
through legal
Catering for the
and
chief fiscal
Point
officer.
of order, Madam Chair, we're being interrupted again for budget-related questions that Mr. Walsh is rightly asking of the HR department. I don't seem to recall this line of concern when we had the prior administration's budget in front of us, when we were asking, the other side of the aisle was asking specific questions on how these job positions can ultimately affect the budget.
we didn't ask, we didn't even have job descriptions, so that it probably didn't happen. So can we move on? I mean,
For a point of order,
listen.
not for your comment, Mr. Mottola. Thank you.
All right.
I have a couple more questions for you. In regards to this position, so you said it's just temporary, right? Because you're doing some special project. So really, this position is not going to be around for that budget. 24? Are you making that representation?
This position will not be there, to the best of my knowledge. I don't plan on having a position that has two dotted line, bosses, if you will.
Yeah.
But
Is this a union position?
no,
Okay. So you don't plan on using this for 2024?
no,
Okay.
not right now, no.
Okay. Thank you.
What, Madam Chair, can I ask a quick budget-related item? Kathleen, I know we talked about it a little bit at length, but I just want to get it clear in my head. Mr. Walsh alluded to it, 55,300, that communications line that was off. And I'm sure it was either an oversight or typo or whatever at 650 for the fiscal year 24 and 25 budget. Would it be safe to say that the future budget is going to reflect the actuals that Mr. Walsh cited tonight, where we are year to date, at least for fiscal year, let's say actual 24 budget, certainly, obviously, it hasn't been properly allocated there, but moving forward, I guess is my question, in future budgets, somewhere closer to the actual expenditure line is what I'm asking.
I made a note just to, there are adjustments that we make in this process. You have kind of a
That's
template
one of them,
it,
Frank?
and I would just
Well,
make that adjustment.
let's.
Okay, great. Thank you.
Okay. All right. Listen, guys, if there's $2,000, $3,000, $5,000, we already said fees and professional services is a line item. It's not specifically allocated to things. I don't think this is a good practice to get into. I mean, if this department has a budget, they've got to live within the budget in total. And if, cell phones go over a couple $100, then they're going to have to make it up elsewhere. So, Frank, I don't know if you want to start moving pennies around in different line items. I'm not sure that's a good use of our time here unless we see something glaring where we're over and under, but I'll leave that up to you. Any more questions on HR?
Yeah, Ms. Charlton, $2,400 or whatever it is. I mean, in regards to the whole budget, it might not be a lot of money, but in regards to if there was numerous things throughout this entire budget, I mean, I think they should be changed.
Yeah, but I think again,
be
Jim, we
accurate.
have $65,000 on another line that's not specified. So every budget line item is an estimate, and things go over and under on these line items all the time. And I think the bottom line is people have to live within their budget, and every year that happens. So if you guys feel strongly about increasing a line item, then I would suggest that we can vote on that on the night we have our budget. I personally think there's enough things in here that are soft that I'm not worried about, cell phones, but that's just my personal opinion. Okay. But I'll leave it to Frank if he wants to move line items around, because I'm not anticipating that we'll be increasing it overall.
No, and I was just trying to get it to move forward. So.
Yeah. Okay. All right. Do we have any other questions on HR? Operations. Okay. All right. Thank you, Kathleen and Peter.
Thank you, everyone. Thank you.
Appreciate you being here. And we look forward to meeting with you again when you guys come back with your payroll project and whatever needs to be done there. And personally, I look forward to supporting whatever it is that can make that work better for us as a town. All right. So we are on to, actually, I'm not sure if you guys stay for this, but unemployment compensation is our next item, which is Department 3150 on page 131. Who's handling that?
I can go over it. When I developed this, I kind of just looked at where we're at in the current year. It was reduced last year, but I think we're on track for this. And I assume, I'm looking it up right now, but I assume someone's going to ask where we are in the current year. So I'll just get that quick. So year to date, we're at about 60,000, so probably trending lower, but it was $250,000 last year. It got reduced to 125,000. So it looks like it'll come on track lower.
Is this year expected to be high? Is this year, are we trending higher because of the terminations or because of any separations that happened?
I wouldn't say we're trending higher because we have 3 months left and we're about halfway through the budget. So I'd actually say.
No, I just mean, would next year be even lower? Like even though we're lower, maybe trending lower than the total budget this year, is this year still out of the ordinary based on any separations that happened as a result of the change in the administration or anything else unusual? In other words, could next year go even lower? That's what I'm trying to get at.
Yeah, I mean, it could, but I would say in 2023 and 22, there weren't any of those terminations and we were about at 150. So,
okay. All right, that's fair. Any questions on this budget, Mr. Walsh?
So Frank, the head count in this budget's going up, correct? It's not going down. So we're not letting people go that we need to plan for unemployment, correct?
No, not that I'm aware of, no.
The actual head count is going up.
The head count in the general fund, yes, going up.
And on the town side is going up.
Correct.
In this budget.
Yes.
Okay, thank you. But how much is going up? I can look it up, I guess, but
The headcount in the general fund?
On the town side.
On the town side, so you have 4 firefighters, and that's just per the arbitration award. You have the teen librarian, and then you have, so I think 6 is the total.
6. What about the first selectman's office?
That's a part-time position. We don't count those in the head count.
Okay. Do you know how many part-timers were going up?
I'm sorry, could you
Are
repeat
there
that?
part-timers going up or down or staying the same?
Part-timers is in head count or payroll?
Yeah, head count for part-time employees that are in the budget.
I mean, you'd have to look at the total budget because, for example, in the library, there's a teen services librarian.
Sure.
Contingent upon that being added, there's a reduction in part-timers in head count there. So, you'd have to look at the total to net out. But I'd say head count wise, I think on the number of part-timers, you got to include seasonals too. So I'd say we're going to be about where we've been with part-time.
Okay, there's nothing in this budget book. You know how the Board of Education always tells us how many FTEs there are and it gives us total head counts. There's nothing in this budget book that will tell you that, correct?
No, traditionally there hasn't been, an equivalent head count for part. There has been in the personnel services, but yeah, and I believe it's in this copy as well, but nothing out of the ordinary. But we also don't include anything for seasonal. The seasonal is just one line item in the budget. We don't give head count for that.
I'd like to see a head count page prepared, and I'm going to ask it's my request, so I'm going to ask seasonals not be included at all.
Okay.
Thanks.
Was that, Mr. Gerber, was that included in your presentation that you made to us? I thought it was, but maybe I'm misremembering.
I didn't include, so each section, we have this, all you do is take each section and cut and paste into a spreadsheet.
Okay, so it was in there. It's just not on all one piece of paper.
It's not all on
You
one
did-
page,
Gotcha.
and, we have the spreadsheet, but the part-time positions for some of the, like for the library, they throw things off. It's really the full-time that is easier to track.
Okay, got it. Thank you. All right,
Lori, just
Mr.
quick.
Testani?
Yeah,
Yep.
just Frank, I'm sorry. Current fiscal year actual right now for unemployment? You said the number, I just.
60,000.
60,000, and the budget was so you're saying it's half, right, right now? We're a little bit more than halfway, so we're going to be under budget probably, right?
As it appears right now, yes.
Okay. All right, very good. Thank you. I just want to double check that number. Appreciate it.
All right, thank you. Let's move on to legal, which is Department 1270. That's on page 76 of the budget book. Thank you, Kathleen.
Thanks, Kathleen.
And I want to welcome our town attorney, Mr. Pierce. Thanks for being here. Sorry for the late hour.
Quite all right. Phil Pierce, town attorney. So there's 2 primary changes from the fiscal year 24 to fiscal year 25 budget. We're anticipating charter revision, and so $100,000 has been budgeted and added to the legal budget for that. There's also the ongoing litigation with United Illuminating, and we've budgeted $200,000 for that. Otherwise, categories are reallocated based on my best estimates at this time, but the overall legal budget, aside from those 2 additions, is relatively stable compared to the prior year.
And you're referring to the schedule that's on the bottom of page 75?
Yes,
of the
on the,
book?
yes,
Okay.
on the bottom of 75. And just to be clear, the United Illuminating figure includes not only legal fees, but expert fees. The town has engaged a number of experts to assist with the litigation. It also includes lobbyist fees.
Okay. Questions on this budget? Mr. Mottola?
Thank you. For the charter revision, I just went through that lovely process a couple of years ago. Is the $100,000, is it the intent, and maybe you don't know, is to hire an outside attorney to assist in that process? Is it going to be someone from maybe your firm, or you just don't know yet? How's that going to work?
So that's not been determined. It's not been determined yet what process will follow for that.
All right. Okay. Just, I get it. Thanks. I think that was the approximate budget 2 years ago, if I recall. It was right around there. So, all right. Thanks.
Okay, Mr. Testani.
Yeah, hi, thanks for coming. So just to get to Mr. Matola's question for a minute, unless I'm reading this wrong, so forgive me, but it looks like from your description on page 75, you've got charter 22, 23, and again, it could be wrong, misprint, whatever, 30,000. Am I reading that wrong? Was it 30,000 at that, for that year?
That was what was budgeted that year.
Okay, do you have what was expended?
Yeah, so that 30,000 was part of a year. There was also expenses that occurred in fiscal year 2021.
So when what, Frank? And can you get that
I mean,
information?
yeah, I'll look it up. Well, I don't know if I could, because I got to go through the individual bills, but I know when we looked at this, what we used to forecast the 100,000 was the numbers that we actually spent in 21 and this 22, 23.
Right, which is why I think it would be helpful to understand how we got to the 100. Right?
Yeah, I mean,
it's not just a guess, right?
No, how we got to the 100 is I went to 21, fiscal year 22 and fiscal year 23. I looked at the expenses for charter revision.
Right, which is why I'm
Thereabouts, they
asking.
were about 100,000.
Right, no,
Yeah.
I'm with you. I understand it. I'm just saying, I think if we had the information for backup, that would be helpful.
And I could be wrong. My understanding on that fee the last time was like a flat one for the attorney. I don't think he was billing by the hour. So I could be wrong, but that was my understanding.
I think he was billing by the hour. I'm pretty sure. But
about that, then I'm wrong. Forget that. Sorry. Thanks.
Okay. And just so the other kind of question I had was you kind of alluded to some of the costs, some of the, you started to kind of lay out for us where some of your other expenses are and how you came up to the 875, right? You sort of listed a few things. Do you have that, like that list of like what each line you're estimating costs, and is that also information you could share? I don't know if that's privileged or whatever. I'm just, again, trying to figure out like exactly how we got to the 875, other than salary, obviously.
it doesn't get more granular than this.
It does. Okay,
What's
that's my question.
In that page, it's difficult in general to estimate legal costs, but because the town has so many legal needs, I think in the aggregate, they kind of smooth out year to year. This year, I think we're tracking relatively close to budget aside from the UI piece, which was a unanticipated expense, as we talked about at the last meeting that I participated in.
Right. Okay, so let me ask this, and we've asked in the legal category before. Are there other attorney offices the town uses? Are they, and how much does each office cost the town?
So there are a number of other law firms providing services. We have Attorney Baldwin is still providing services on a number of cases. We have.
I'm sorry to interrupt.
Yeah.
I just wondered if you had a list, maybe that would be easier.
Oh, you want as a list?
Yeah,
Sure.
to communicate to us.
We can do that.
We have that backup. Thank you. Appreciate
I mean,
it.
I'm happy to, I can tell you now,
Sure.
in general, some of
Let's
us.
do both. Why not?
Bertram Moses is doing work for the town.
Been correct, Bertram?
Yes, Wigan and Dana. Shipman and Goodwin has done work. Pullman and Connolly's doing bond work, but that's not in the legal budget. That's paid out of the bonds. Rose Cowler is performing legal work. Marino, Zabel, and Schellenberg.
Is that Rose Kaler?
Kaler, yeah.
Yeah.
But those are the ones that occur to me in the moment.
Have they, sounds like they're historical, right? Ones the town has used previously. It's not like you added anyone different this year. Is that fair to say?
No, I've not added anyone different.
Okay. Thank you. Appreciate that.
Mr. Walsh?
Mr. Peters, I'd appreciate that list if you don't mind. And with that list, can you, in general terms, as you're comfortable, describe what type of work they do for the town of Fairfield? What kind of matters do they handle in general? I don't want to disclose anything attorney-client privilege, but whatever you can provide in a general sense. And can you also, in that list, provide us what their hourly rates are? Are they all similar? Well, let me ask you now, are they all similar to your firm's rates?
They vary. We're kind of on the lower end. We're doing all work at $250 an hour, which is a pretty reasonable municipal rate. Some of the rates are as high as 600, depending on the service that's being provided.
And is your retainer agreement with the town of Fairfield, is that for a yearly basis and then it's going to go up, or is that for the entire time that you're the town attorney?
That was approved by the Board of Selectmen, and it won't be changed without subsequent approval by the Board of Selectmen.
All right. I would ask you that once it's changed, if you could supply it to our chairman or chairwoman, excuse me, so that we would know that there was a change in your rate, because some of us don't sit there and watch every Board of Selectmen meeting, just like I'm sure some Board of Selectmen members don't watch our meetings. So, if I'd appreciate that if you could just, this way, when we see your next budget, we can understand why it's gone up. Out of the $875,000, what percentage of the work do you think your firm will provide in the coming year in this budget?
So it's relatively hard to say, but I would say my best estimate would probably be half to 65%, maybe.
Okay, now I'm not going to hold you to it.
Yeah,
I understand you don't know what's exactly going to happen. So probably 50 to 65% or something, 70, between 50 and 70%.
Probably, maybe more like 65%,
Okay.
70%.
Okay, right. The $100,000 for the charter, is there a budget for that? That's all legal fees, correct?
That would be legal fees, yes.
No experts, nobody else. So if like the town wanted to hire a charter expert to help write a charter, I think the last administration did that when they were doing their charter. That's not going to be part of the 100,000. It would be over that, correct?
I think that they hired a lawyer. I don't think it was a charter expert. Was it?
They hired attorney Mednick.
Right, but he's a lawyer in private
He's
practice.
a lawyer.
Okay.
Yeah.
I just knew they had somebody working with their committee.
That was
Okay. So, so we're going to try to, when's that process? What's the process like this coming year? Is that what you're saying?
Yes, it will start this year.
All right. So we just lost one. We spent a bunch of money on it. And now we're going to try it again.
Yes.
Okay, great.
May I comment on that?
Sure.
There were, if we probably you wouldn't be saying that we lost one if it had been broken out into separate questions. We probably would have gotten a number of those things. So, if the intention is to break it out, we'll probably hopefully get some clear changes that people want.
Okay. And I'm not, I don't know whether that's true or not true. Bill, I appreciate that. And maybe it will, some things will pass and some things won't, or I don't know whether people go into the booth and just vote the whole thing down or up, or I really don't know. Sometimes I talk to people about the last one and people didn't even seem to know what it was even about. And they were still voting one way or the other. Okay. So a driver in your budget, because it's a pretty large increase. It's 54% increase year over year. The driver seems to be the UI matter. And what have you spent to date, or what do you think you're going to spend by the end of this fiscal year? I know you gave us an update recently, and I thought the number you had spent was in the 200s. Maybe I'm wrong. I'm just going from memory.
So I'm trying to think when I was before the board. There's only been one additional invoice rendered, and it was since I last appeared before you, and it was for $14,000. So that's the only thing that's changed since then. We are currently prepping the appeal, which will be filed in the very near term. I don't have a good sense of the amount of time. That's a major undertaking.
Sure.
I don't have a sense of the amount of time that's been spent on that. I think as things are playing out, I would expect that we are not going to come close to reaching 200,000 from that additional amount that we talked about. And that's in part because of this plan that the Siting Council approved has not been designed by UI, and they've come out and said that publicly at this point. So what that means is that realistically, they're not going to present a D&M plan before the council, which is the next phase in the process, until the next fiscal year. I mean, probably September at the earliest. So there may be, other than filing the appeal, it's possible we get into the briefing schedule, but there might not be the volume of work that was potentially to be taken or to be worked on.
And are you still in settlement negotiations with them?
I don't know if I would characterize it as settlement negotiations. They've met with us on a couple of occasions. They are in the process of figuring out what their design is going to look like, and we're hopeful that they're going to involve the town in that. But it's not as if
But if they did involve the town, and this could end over lunch one day if it was an agreeable plan to the town.
Well, I mean, depending on the mechanism by which it's settled, it's probably, there's more to it than that, but.
Okay. So if you don't need all this money, what I'm seeking is, are you going to still spend this money that's not spent? So say it settles by July 1st. Are you going to be holding back the $200,000 you said that you're going to need for fiscal year 25 and not spend it?
We would not need to spend the 200,000 on UI if the matter is concluded.
Okay. Okay. And then if UI goes away at the 25, when you come back here next year, I'm not going to be seeing $875,000 plus an increase, right? I should be seeing an $875,000 with some form of increase minus $200,000 and minus a charter revision because it'll be either up or down by then. Correct?
You're not going to have, if UI is concluded, UI is not going to be in the budget. And
we've just seen it on this board. Sometimes like a special thing comes up and we budget for it. And then it never goes down. They come in the next year, a department with some line, and it goes up by 6%. And it's like, wait a minute, what happened? That was a one-time thing that we were properly budgeting for. And that's what we're afraid of. And that's why I'm asking these questions. I'm not trying to be, difficult with you. I'm just saying you have two large things that are a driver in your budget. $100,000 for charter revision and $200,000 for UI. Hopefully both will be over by the end of 2025. And when we come here next year, expecting neither will be in the budget, but we'll see where you stand with the case. So, all right, if you can just get me those numbers, I appreciate it on the other firms and things like that. I appreciate it. Thank you very much.
Okay, thank you. I just want to go over the rest of the agenda tonight. We have quite a bit yet to discuss, and I think it's important that we try to get through most of this tonight. I'd rather not defer it until Tuesday because I think there may be follow-up questions based on what we hear tonight, and that is the purpose of Tuesday's meeting. So while Mr. Piers is here, typically we meet in executive session and we go through a summary of open litigation, and the board gets comfortable that litigation for existing cases is covered in the amounts that have been designated for that purpose in the Internal Service Fund. So we want to do that. After that, we've got the finance department, and there are some fairly significant items in there, including revenue, which has a budget for investment income, several other revenue items, and then the finance expense budget. And then we have debt service. So as I said, let's move forward. I'd like to get through as much of this as possible. I really would prefer not to defer anything, maybe debt service if we have to, because I do want to save Tuesday to follow up on these things. So if it's okay with everyone at this point, and FairTV will have to help us here, but I'd like to, maybe if, I'll take a motion, if someone wants to make a motion to go into executive session so that we can have the discussion regarding the legal matters. And again, the purpose of this is to discuss pending litigation for the purpose of understanding whether there's an appropriate budget for these items in the internal service fund. So does someone want to make a motion for that?
I'll make,
Mr. Mottola? Yeah. Okay, seconded by Mr. Testani. Okay.
Ms. Ruggiero.
It's Amy.
Sorry, Amy, I can't tell which arm it is from here, Mr. Ruggiero.
Very easily confused, Larry.
Well, not really, except for your arms from this. It's different. Okay, so I think do we have to all vote on this?
in favor?
All right. Okay, so we'll go into executive session and we'll need to ask any members of the public to step out and FairTV to suspend the broadcast. Are we back? Are we all set? Okay. All right. Does someone want to make a motion to come out of executive session?
I,
All right, Mr. Walsh and Ms. Ruggiero seconds. All in favor? Okay, it is unanimous. Okay, so we just came out of executive session where the board discussed with the town attorney some pending litigation matters. It's just an informational session and no votes were taken. Right, so we're going to continue on with the agenda, which takes us to the finance department, and it's department 3010. We'd like to start with revenue, which is on page 101 of the budget book. There is quite a bit here in the finance budget, a lot of line items, but if we can, just because I think we have some people who have been waiting here a long time, I think it would be best to start with within the finance revenue budget, have a separate discussion about the dividend and interest income line. And then once we're done with that, we can get a presentation on the rest of the revenue and then the finance expense budget. So Frank, how are we going to do this? Do you want to kick this off or do you want to introduce someone else?
I mean, I can go over just what's in the backup and then for the piece for the consultants, I could kick it off to them if there's any comment or questions, and then we can go from there.
Okay, yeah, I should have mentioned the separate analysis of investment income begins on page 28 of the posted backup, 28 of the PDF. Frank, again, do you want to kick us off or introduce someone?
Yeah.
I'll leave it to you. All right.
Yeah, so on printed page 23, just I'm imagining it's probably around page 26 or 27 of the PDF copy. I just included an outline of our budget for FY24, the quarterly. You know, that Caitlin mentioned that we'd be very well off for the current year for investment income. And then I have multiple scenarios that were provided from our investment advisors, and then the selected case. So you'll see on page 23, printed copy once again, going from right to left. You know, we asked for 3 scenarios, one with a base, the other with faster rate cuts, and the other with slower rate cuts. The scenario we selected was the base, which assumed $5 million in investment income for what was with our investment portfolio with our advisors. Then the second tranche of this is interest on our cash, which is interest in our money market and sweep account, and then interest on our STIF. And the way that you get to that is for the interest on our money market cash, essentially money with M&T, sweep, and checking. I just took the average daily, I looked at the average daily balance over approximately 2 years. Assume that average daily balance included some money that was issued for debt and then a portion of the WPCA balance. I notated here that I assumed 14 million in fund balance was WPCA and 26 million in debt service that we would spend out in the current year. So that's about $40 million. So if you take that 93 million in an average daily balance, subtract 40 million, get to about a $53 million in average in a median daily balance, multiplied by an assumed weighted average of interest rates, assuming that those would be tapered down over the course of next year. You get about $2.1 million in interest from, like I said, our depositories. And then the STIF number uses the Fed rate and assumes also a step down on that. Less fees, and then you get to the current year budget number of about $8.3 million. And I think that's where I would kick it off to the investment advisors on our on the top number in the selected case, which is the middle of the page, but our $5 million assumption in investment income, and let them talk about that and how they came up with that.
All right, thank you, Frank. Ms. Gerber, Mr. Charlton, or excuse me, Mr. Gerber, Ms. Charlton. It's been a long day, forgive me.
Sorry about that. Thank you.
We're here to support you at the end of the day or the beginning. My name is Guy Labat. I'm a representative of Janney Montgomery Scott. I'm here with my colleague Carolyn Frajap, who is a Fairfield, who grew up in Fairfield and is a relationship manager with the town as well. For those who are not familiar, Janney is a 192 years young investment manager with about $135 billion in client assets. My team within Janney is responsible for managing what we call discretionary fixed income portfolios for our clients. We act as fiduciaries who are legally and ethically responsible for making investment decisions solely in Fairfield's best interest. One last note of background, we were selected in 2023 as part of a nationwide RFP process, I think for a couple of reasons. One was the services and the customized nature that we provide, consistent with Connecticut state statute, but two is also our very low cost of providing those services. So with that said, let me touch on Fairfield's portfolio. We invest on your behalf, your general fund monies, which total approximately $129 million. We've divided that total amount into two pools, one with slightly more liquidity, one with slightly more income generation. Everything within this is consistent, all holdings, with both Connecticut state statute as well as Fairfield's investment policy, which is narrower than that statute. Our investment philosophy for public funds clients is very much a risk-first approach. And my associates in Philadelphia, we consider ourselves first and foremost risk managers. A bit more than half of Fairfield's portfolio is in U.S. Treasuries and government agencies, which have low volatility and are saleable on a moment's notice, 4 hours a day. The remaining approximately 45% is in AA and AAA rated taxable municipal bonds that generate more income. That's why they're there in the portfolio. My colleagues and I independently review the creditworthiness of each individual security within the portfolio to ensure their safety. And I would like to point out finally that everything within the portfolio meets the Federal Reserve's definition of what they call high quality liquid assets, either level 1 or level 2 in that respect. The portfolio is relatively short term. So as a result, about half of the portfolio reprices or matures and gets reinvested every 2 years. As Frank hinted a moment ago, it's likely the Federal Reserve will reduce interest rates in 2024. And so all else equal, I think it makes sense at this point, we're doing this for many clients, to lock in slightly longer term bonds so that we're not affected, and our clients are not affected by declining income as the Federal Reserve probably lowers interest rates later this year. In terms of what we're estimating for income for 2025, we believe the portfolio will generate a touch over $5 million. That number is based on the interest payments from bonds we already invest on your behalf, as well as from some assumptions about the reinvestment, which Frank touched on a minute ago. The estimate is sensitive to where interest rates go. So if rates move up higher, reinvestment income will be more. If rates move down lower, reinvestment income will be less. So allow me to just conclude very briefly. Our role here is as a fiduciary, ultimately to help safeguard your taxpayers' general fund monies solely in your best interest. It is our estimate that for fiscal 2025, the most likely range of income generation from the investment portfolio is between about $4.8 and $5.2 million with a midpoint of $5 million. It's also our advice at this point that we invest slightly longer term on Fairfield's behalf in order to lock in some of those higher returns that are available today that might disappear after the Federal Reserve lowers interest rates, most likely later this year. So that concludes my prepared remarks. I know it's late, but I'd value the opportunity to have any discussions as part of this as well.
Okay, thank you so much. So what's in the base case or the base scenario, which is also made its way into the budget number, the 5027, 587. That's on page, we've got that on page 24 for board members, page 29 for the public. I mean, anything else in detail you want to talk about? What, so these are different, what do we have here? What are the numbers here? Are these different bond issuances, or what are they?
Each of the columns represent different interest rate scenarios that we think are likely to emerge. Both a most likely or a base case scenario you see labeled in approximately the middle. To the right of that, it is an estimate for interest income from the investment portfolio in a lower interest rate scenario, and then subsequently a higher interest rate scenario. So I think that's a good way to frame the possible range of investment income from the bond portfolio that you own.
Okay, so I guess are these maturities that we have in the left column? What am I reading here? Or is that just the date, or no, that's just the month of the interest projection for that month of the fiscal year. Okay.
I think he's on the other page, Lori. I think he's on 28 of the PDF.
I'm looking at the page labeled as 28 of the PDF. Page 29 of the PDF is a month by month estimate that same numbers you saw on the prior page.
Okay. Yeah, and again, am I missing it here, or do we have the maturities of our, how many investments is this? How many bonds is this, and what is the range of maturities?
So there is $129 million invested. The maturity range goes from essentially zero, extremely short term, to the longest maturity is approximately 6 years right now. Fully 50% of the portfolio either matures or what we in the bond markets would call reprices within 2 years. So I would describe this as a short maturity portfolio. The upside is that has low interest rate volatility. The downside is that if the Federal Reserve lowers interest rates rapidly, right, you'll be generating less income from the portfolio. And so we seek on your behalf to find a balance between those two things.
How many actual securities are in the portfolio? That's what I was trying to understand.
Let's see. So there are approximately 150 individual securities.
Oh, okay. So 150 securities ranging from about to mature through 6 years. Okay.
Yes. Approximately 8% is in that 6-year bucket, is a small portion.
All right. John, do you want to take any questions from the board?
Any questions? Mr. Carley?
Thank you, Mr. Vice Chair. It's getting late, getting a little fuzzy. I'm looking at the page 28 of the PDF, marked 23, page 23 of the hard copy. I'm looking at the top line, the income estimate. I understand that the base scenario is your starting point, and then it's clear on that top line that you've got a little bit of a deviation, a little low, a little high. But what strikes me is two things. One, the deviation is pretty small. It's only $100,000 to $200,000 up or down. So that seems like a relatively small change. And I wanted to understand what assumptions you put into those two high and low cases. And then secondly, likely unrelated, and again, maybe it's because I'm late, but I'm just not following why what the second line for the deduction for mark-to-market adjustment is. I want to understand what that represents and why it's not in the selected column, because obviously that changes the bottom line number pretty dramatically. So those are two unrelated questions, I think, but if you could help us there, I'd appreciate it.
Sure, I'd be happy to. So the scenarios are relatively narrow in range. I would agree with that. The base case scenario is derived from essentially what was already priced into the bond markets at the time we prepared this, which was several weeks ago. So that's what the base case is. And by using market pricing, that mitigates a lot of the assumptions ultimately. The faster rate cut scenario is as an assumption that there would be an economic downturn and the Federal Reserve would act more rapidly. But keep in mind that a large portion of the portfolio will take 1 year or more to mature and then be reinvested. So a good portion of that income is already locked in, right, for at least this fiscal year. It's really outer fiscal years where changes in the portfolio would start to have an effect. Similar story to the slower rate cut scenario where interest rates rise a little bit. The income generation for the portfolio wouldn't change all that much because only a portion would be maturing over that period. Again, more after the end of fiscal year 25. In terms of the mark-to-market estimate, so my understanding of Fairfield's accounting policies is that you are required to budget for the change in market value of a bond portfolio on a specific day, namely June 30th of each fiscal year. It's very hard to predict exactly what the market value of a portfolio of securities is going to be on a specific date, even the ones that we're investing on your behalf, which are very safe and relatively low volatility. In the past, what we have provided is an estimate of 1 standard deviation downside of the market value of the investment portfolio to capture that estimate. My sort of contribution to the process ends with providing that estimate, and I'll pass it on to Frank to share any more thoughts on the matter.
On that end, we did speak with our external auditor about that. We do have to disclose that. It can be done in the ACFR. It does not have to be done within the budget. So that's the intent.
Which makes all the sense in the world. Frankly, for many of the other public clients that I invest on behalf of and my team here in Philadelphia invests on behalf of, you were the only one previously that included a mark-to-market measurement in the budget.
So is this a change in the budget process to exclude it in this year, but in prior years we?
Yeah, we were, can I just jump in here? Because I had talked about this, I had asked about this earlier with the administration. I never understood why we budgeted this mark-to-market adjustment. It's a GAAP adjustment that gets made, but we hold these bonds to maturity. You know, we don't trade them. And so so that mark-to-market adjustment is a non-cash item. And again, it's a valuation adjustment, but we hold these bonds to maturity. So as long as you hold the bond to maturity, that mark-to-market adjustment, it never materializes. You just, the coupon keeps paying and the bond matures. So it's interesting to hear that we were the only municipality that actually used to put that in our budget, because I never really understood why we did.
Spoken like an auditor.
Yeah,
I'm just, because I don't want anybody to be surprised, but I looked at other municipalities and they don't budget it, but just so at the end of the year, nobody's surprised that it will show up as it will show up as a negative. The mark-to-market does get reported in the fund.
It's in our GAAP financials. Yeah.
Yeah, but there's no difference between the budgetary basis and GAAP in this case. I asked Joe Centify. I mean, you can confirm with him directly, but like I said, I just don't want, it may not, people may not budget, and that's very much true. I think they just handle it with, additional surplus that they generate. But I just don't want anybody to be surprised if it shows up and it's, it's offsetting surplus or something like that.
Okay, that's clear to me, and I take a lot of comfort on the first point that even with the stress scenarios, that we've got very little volatility on the income estimate. So I'm good. Thank you.
Other questions on this, Mr. Stark?
Yeah, page 23, base scenario.
Yes.
Are those numbers supposed to sum to 7.2 million? The presentation is extremely confusing. They don't. They don't go anywhere near 7 million.
You have a subtotal there, I think, Kevin. The third line takes the
5 less the red goes to that, and then from there down to sub.
Oh, I see. Okay. How many rate cuts are assumed in the base scenario?
So the base scenario, this is a few weeks ago, and we just had a Federal Reserve meeting. I guess it's yesterday, it might be in 7 minutes, it'll be 2 days ago. Yesterday at this point, so some small changes. But I believe, if memory serves, there were 5 rate cuts priced in at that time. To be honest, at this point, the slower rate cut scenario is probably a little bit more likely. But I don't want to make a lot of changes close into your budgeting date, essentially.
Right. Carrying over to the actual budget, it doesn't look like we're actually modeling for a mark to market. If I look at line 44005, page 101 of the budget, I see 0 there. Is that right?
That's correct.
Okay. I agree with that, because in a rising interest rate environment, all existing treasuries, a declining interest rate environment, which is what we're expected to see, all of the existing treasuries that we own should go up in value, not down. And it makes me wonder then, why don't we don't need to budget for it, but we probably should expect a positive mark to market, at least in GAAP terms, as of June 30th, 2025. Not that it's spendable money, but that it will be a fact of life, most likely.
So I will say that the economic scenario which we're faced with in the United States, while it's positive in lots of ways, is truly unprecedented. And it's very hard for us to say with confidence where interest rates are going to be approximately 17 months hence. So I'd be cautious about spending that for sure.
Y'all done? Yeah.
Thank you. Mr. Walsh or Mr. Testani? I'm not sure.
Okay, thanks. So, Kevin, thanks for asking that question about how many interest rate changes, because that's what I was going to go for my first question. So you got that out of the way. And then my second one, Guy, this is Jim Walsh. I didn't catch your last name. I remember we spoke last year, and I do remember you. So you can call me Jim. But now that we are past this Fed Reserve date of maybe 4 minutes to go before 2 days, you said that, and that's what I was going to ask you but you kind of covered it a little bit, that you think that you would have said we were closer to the slower rate. So why wouldn't we amend this and take advantage of the extra income?
Well, it's my, so that's ultimately a decision for you to make about how comfortable with being more aggressive or less aggressive you are. Part of it is just the nature of the time delay of putting these documents together.
I understand that.
Yeah, and part of it is also my own professional interest in being conservative on your behalf.
Sure. You don't want to oversell. I get it. So, but if it was today, you'd probably be recommending more towards the base scenario being closer to what the slower rate cut scenario is?
Yes, I suspect so.
Okay. All right. Thank you for that information. And I personally think you guys do a great job for the fee that you charge.
That's kind of you to say so. Thank you.
Thank you, Mr. Walsh. Other questions from the board on this section? John, is there anyone?
I don't see anybody.
Nope. One more quickie, just so I understand the sheet in case we see it again next year. The less 40 million, is that because that's not an interest earning amount, or Frank?
I just make an assumption that you're going to issue debt. Because when I look, so.
Got it.
Well, let me just finish by saying thank you very much for the opportunity to work with you. I've had the privilege of working with various administrations and employees at Fairfield for the last approximately 15 years, Carolyn the same, and we value that and we'll look forward to continuing to do so.
Thank you. Great job.
Thank you very much. Sorry to keep you here so late. We appreciate you sticking
to watch your meeting.
All right. Good night. Okay.
For the record, he was way too awake. I don't know.
All right.
So we got the Janny piece. Frank, is there anything else, Frank, Bill, David, that you want to talk about in terms of the assumptions on the rest of the portfolio? I'm still a little bit confused on the 40 million. I just want to make sure I understand that. And I understand part of that's an allocation to the WPCA, but is there anything else that you want to touch on in terms of highlights on this?
I'll take the 40 million piece, and then I think Mr. Gerber has something. But we are definitely, I mean, it's come up a few times, all the allocated and bonded out funds that haven't been spent that are sitting in the coffers. So we are trying to get those projects moving along. So, you know, Frank accounts for a number of things. I mean, I'd give one example is, you know, $10 million was HVAC. They thought they'd spend that last year. It's now probably not going to get spent until July 1. But as soon as that goes out the door and we bond this year's allocation, that's actually all probably going to move really quickly. So we have things like that that are existing. And then there's a lot of smaller or medium-sized projects that are sitting there that are going to get spent. I mean, we're really trying to work to get the projects moving. So when you do that, you're obviously going to earn less interest, you know, and so we've got items like that.
So in other words, our median daily balance of 93 million is expected to be lower because we're going to spend down some of the cash that we have sitting around, bonded or ARPA money or whatever else. Did you say, and that's did I hear that right? 28 million and then 12 million is because of part of this gets allocated to the WPCA, or did I get that wrong?
It's in the footnote on that schedule.
Oh, sorry, 14 million. All right. Yeah, I'm been looking at the screen too long. So 14 million and 26 million. Got it. All right. Thank you. Sorry, I'm getting a little slower now since it's officially 12:01.
Madam Chair?
Yep.
Just before we move off this 40 million, I understand the concept, but to me, it seems like there's some conservatism in there to assume 40. I'm not suggesting that we change this number, but it would strike me that we would have to spend the 40 million on day one and not get the benefit. Like if we're going to spend that 40 million over time, on average, it's not going to be 40 for the full year. So, but
it's really 26 though, right? You're saying that because the 14 million is just going to be put in the WPCA number, but it's the 20, your point taken, but I think it's 26 million, right?
And
I think maybe it's getting too late, but I still see, regardless of whether it's WPCA money or town money, it's still 40 million that we're not spending on projects on day one.
Yeah.
Oh, I thought we were taking out the 14 million because the 14 million is going to be that's interest income that's going to be allocated to the WPCA.
Correct, for the 14, and then the 26 is an assumption on the town side. And I mean, these numbers ebb and flow. Obviously, we do a bond, you know, in July 1, funds come in. We then have a significant balance from there. We have our collection for the quarter, but we're attempting to not have as much on hand as previously. So we're trying to, these are assumptions. I mean, if you wanted to tweak that number up, the number probably is higher. Same as if we are assuming 3 rate cuts, we could, you know, instead of 5, you could tweak that. We're trying to kind of find the balance in being, you know, conservative, not creating cliffs, but also not creating unnecessary surplus, therefore extra taxation too. So it's a balance.
Ms. Charlton, can I ask a question?
Yes.
To the administration, the $14 million, does that just stay invested in Janny and we just give them the interest off of that portion?
No. So
or is it separated into a separate fund?
The $14 million is the WPCA money, and it's assumed that is in the, i.e. stiff money markets sweep accounts, because we all know that the WPCA is going to have a lot of projects and their debt service is going to ramp up rapidly. So you wouldn't want to commit that into anything longer term.
So what day do we give that to them? July 1st?
What do you mean, what day do we give it to them?
It's $14 million,
It's
right?
it's their cash. It's pooled cash into the same account. So we're not gonna, last year we made the decision to budget investment income in the WPCA. So if I included the 14 million in here, then we'd be saying, then I'd be budgeting 14 million, interest on 14 million in the general fund and interest on 14 million in the WPCA. WPCA gets investment in its own investment income.
So it stays in the money market in the sweep account, and it stays there. So they're getting the interest from July 1 on, right?
Yes.
It just
yeah.
stays there.
Yeah,
right?
so how it's mechanically working right now is that quarterly, Caitlin will pull the ending cash balance at the end of each month for the quarter, and then I calculate a weighted average interest rate to apply to that.
So getting back to Mr. Curley's point, I can understand the $14 million not being included, but 26 is not going to be expended right away. The 14, they're going to be getting it from July 1st. We know that.
Yeah, but remember, it's really not just debt that's issued and spent out in the same year. I may have misspoke a little bit on that. It's also debt. You know, I think the school had 10 million for like HVAC that it hasn't spent out yet. So there's other projects like that and that we bonded for in the current year that I would expect could also leave that amount. So I'm kind of
We're going to spend ARPA money too, right? We got ARPA
yes,
money.
and yes, and there's the ARPA money in there. So it's taking all that into account.
Madam Chair, one more question.
Yeah.
I know we're not focused on WPCA tonight, but certainly we just touched on it. And last week when we talked about it, I had pointed out that the investment in interest income seemed to be inconsistent with what we were seeing here on the town side. We were seeing a material increase year over year, and on the WPCA side, we were seeing a material decrease. I think both were in the plus 40% on the town side and minus 40% on the WPCA side. Have you had a chance to revisit the WPCA calculations?
So getting to your point, if you look on the proposed changes document.
Yep.
You look at the second page, there's the WPCA fund, and I took their 14 million and multiplied it by the 3.94%. You get around $551,000 in revenue. So over what's been proposed in the budget for WPCA, you'd increase their revenue from the proposed by 251,000, which would also be an increase over last year. But not as great of an increase because they are going to start, they're entering an interesting period because we've all been seeing them save money and build up their fund balance. And now if a lot of debt that they issue in fiscal year 2025, that the interest payments are going to be.
Perfect. Thank you for revisiting that. Appreciate that. That's $250,000 that makes a difference. Thank you.
Thank you, Mr. Curley. Other questions on this before I know Mr. Gerber had comments, but any other questions on this calculation? Okay. Mr. Gerber?
Yeah, I just wanted to, and it's late, and I think we should definitely talk further about this when we're all wide awake, but we have started making a fundamental shift in how our cash has been invested over the past few years. We had over 100 million, I would say about 120 million of cash in M&T Bank, and it was, unsecured. I felt that level of counterparty risk was not acceptable to me. We've set up, or I should say to us, we set up two custody accounts, one at Fidelity, one at Charles Schwab. We've moved 50 million of that from M&T into the Schwab account, invested in a short-term treasury fund. It is currently earning similar interest rate as M&T Bank. So And it's completely, it's a custody account with Treasury, so it's as secure as you can get, I believe. The STIF, we have 30 million, we had 35 million there. Turns out we dug into the STIF underlying investments. While it's perfectly good fund, the underlying investments, actually, some of them don't comply with our investment policy. I think 30% of that fund is repos, and there are some municipal bonds, I believe, that don't comply with our investment policy. We have moved that now temporarily into M&T. That's going to be going to either Fidelity or Schwab probably tomorrow. We would like to move more of our M&T money out, but since we haven't yet, we don't do cash flow projections yet. It would be difficult to do that because we don't want to be short. But once we get a cash flow projection process in place, we'll be able to have a lower balance in that account. Sorry. The upshot of this is we'll have similar earnings in a less risky accounts, and potentially save some money on fees. I think we'll go into this in a lot more detail with a lot more to say about this in a few weeks, but hopefully everyone agrees that over 100 million in uninsured deposits probably is not where we wanted to be.
Thank you. Wow. Okay. Thank you for that. Is that Mr. Curley?
Thank you, Madam Chair. Thank you for that update. Mr. Gerber, I just want to say that given what the banking industry went through last year with Signature Bank and Silicon Valley Bank, I would not expect that M&T could be any different. So I think your decisions were prudent, and appreciate the consideration for the security of the town's cash position. I am surprised that the STIF investments did have underlying investments that were outside of our investment policy. That actually took some diligence to get to. So thanks for that as well. That does surprise me, because I thought the intent of the STIF fund was actually to support municipal finance. So I don't know if that's a discussion that we need to have with the state comptroller or the treasurer, but I think that's something we can investigate at some point in the future. But in the meantime, if it's not in compliance with our policy, then you've made the right step. So thank you.
Look, I mean, we'd say M&T is a good bank. The STIF is a good fund, just not, not where we should be if we're not in compliance or not in a protected position.
Yeah. I mean, just that level of concentration risk in one regional bank is just not where we should be. Agree. On the STIF, I did think and I haven't done a comparison. I read the investment policy every year when I read the CAFR, but I do remember Guy just saying that our investment policy is narrower than the state statute. And so maybe that's the difference, that, we've been more conservative in our policy, which is fine. And that's why we can't, I mean, I'm glad that we're looking at the underlying investments in the STIF. I guess I'm kind of surprised we didn't do that before. I was under the mistaken impression that there were short-term treasuries underneath that thing. I didn't realize that there were repos and municipal bonds and other things. So
yeah, and I apologize for going off budget, since I've been saying we should stick on the budget, but I didn't want to miss this opportunity, since it is a major shift, and I didn't want anyone to be mad for me not giving you guys the heads up. So.
No, I think the most important thing you said related to the budget is you think that when we make this shift, we're going to get similar rates on the sort of you know, on the different investments, and we might even save some fees. So it looks like nothing but upside there. But so that is very relevant to the budget, because if we were going to change our investment strategy, I think the obvious question would be, what does that do to our expected earnings? So thank you for that summary. Does anyone have questions on what they just heard? Mr. Walsh?
Yeah. So the rates are going to be exactly the same?
Not exactly the same.
Okay, so can we get a new sheet on what you guys think they're going to be? Since there's a major change?
Well, it's in progress. We could do a staged change, but it's going to be changing sort of potentially each week until once we get cash flow projections, it's going to change again. But what we can do is give you, I mean, the easiest thing to do is give you current rates in each of the accounts.
Yeah, I'd just like to see like the most accurate. I appreciate you bringing this up tonight. I do. So thank you for telling us about it. But I'd like to see the most accurate situation we have and what it's going to be. Since it's already in progress. 50 million's moved. 50 million's moving tomorrow. Okay.
50 million's moved, 35 million's moved tomorrow.
85.
We're currently at 5.18 on the rate. In the Treasury Fund, M&T was at 5.2 and the STIF was hovering approximately 5.2. So you're right in the same range as far as what those buckets of funds were earning previously.
Are they going to be in a money market rate at those other investment companies that you're more moving the money to?
Currently it's in a Treasury Fund, and the other one will go in a Treasury Fund, at least in the short term. So that's a little bit different than a money market. The money market, you get it's about 20 basis points in additional return. That's out to around $411 a day, 15,000 or so a month. I mean, it's a small margin, but actually moving into that actually helps us a little bit.
Okay, I would just like it to be accurate, like to say a Treasury Fund or whatever, so that when we vote on it, we are voting on accurate information. So if you guys could update that, I'd appreciate it.
Sure. Okay. Yeah, this is I'm glad we got to this, because we can address this in our follow-up meeting. And I would just say that, you know, what we talked about a few minutes ago is that we see some conservatism throughout this calculation, which is appropriate. Guy talked about the slower rate cut scenario, which he would have recommended if we were doing this today. We've got, you know, maybe some conservatism because we've taken down the average daily balance, assuming that 26 million, you know, goes away on day one. So, you know, I'm not worried about this, but I do agree, like, yeah, let's get the detail on the rates. I'm not sure if we'll get a brand new calculation of this with everything moving, but I'm glad we've got some conservatism built in, so we can follow up on Tuesday. Jack, did you have a question?
I just wondered where, like, I know, Mr. Gerber, you mentioned a couple different, is it more than 2 different vehicles that you move the town's money into, or just help us to understand? I know we're talking about rates. I just wondered.
Yeah, so we've opened 2 custody accounts, one at Fidelity
and one at
Schwab.
Okay.
Right now.
How's the money divided again? I'm sorry.
It is going to be probably divided into use. So we may use one for some to write some or do ACH out of, but right now we haven't really determined that. We just wanted to get a chunk of money out of a risky sort of something that was causing several of us to lose sleep.
No, I understand. I would too. But the amount of money that is allocated into each. So can you help us understand how much does Schwab have and how much does?
Right now, Fidelity doesn't have anything. So
Schwab has.
We're gonna more or less split it.
Split it. Okay, yeah, that was my question.
Yeah.
Thank you. Appreciate that.
Okay, thank you. All right, maybe if we could, as I said, I want to try to get through finance if we can. So let's see how many questions there are, but can we move on to, and I don't know who's going to take us through this, David or Frank, but Are there any highlights or should we just jump into Q&A? Do you want to discuss any highlights on the finance revenue? We've got some grants there. Are those locked? Do we, is there anything you can tell us about those or any other fluctuations in here?
Yeah, this year I provided, and I did it in other budgets, an overview of what some of those grants are, and the foundation of them. Basically, how I projected this out was we get a list from Connecticut Conference of Municipalities, the delegation there that does a thorough review of the state budget. They submit a schedule to municipalities showing how much you should budget for that grant revenue, and then that's what I incorporated in this budget. The one thing that's and from the quarterlies, you might recall, so I'll just try to preempt a question, but we've gotten some additional, I've heard it mentioned before, it's a bad name for a grant, but we've gotten some additional sales tax money through the MRSA.
MRSA.
Yeah, through the MRSA grant. But in talking with the delegation there, they said that that's not revenue that you should budget because it's a number that the state apportions out after it's kind of closed its books, and it's not stable from year to year. So we've had a good year, and we got $1 million in the current fiscal year, but they said that they couldn't tell anybody what it's to be, and their advice to localities is to not budget that. So that's the only thing that that's not budgeted in there, and you'll see in their schedule they show it as 0. And I can answer any questions related to that.
Okay. Are there questions on that or anything else on finance revenue?
Madam Chair, just real quick, Frank, on 42512, rental income miscellaneous, you explain the differential there? I mean, I'm not saying I'm against it, I just.
42512, did you say?
Yes, rental, I'm sorry, am I looking at the wrong?
Yeah, I think you are, Jack.
I believe.
It's a big increase, right, Jack?
Yeah, exactly.
I just am not seeing that account number, 42.
It's on page
102, Lori.
102. I think it's.
Oh,
about-
they're not in,
it's the third
okay,
line
sorry,
from the
they're not
top.
in order. 42, forgot it, sorry, okay.
That's where there wasn't, you'll see as you move down the page, some lease for Sprint, T-Mobile, AT&T, Verizon. I believe that's a lease agreement with Dish. And I could split it out into its own separate line. I think it just may have been when I got the number and just making sure it got into the budget as a revenue. There may not have been enough time to add the line, but I believe that's related to the Dish lease, but I could follow on that.
Yeah, just double check that. Thanks, Frank. Appreciate it.
Thank you, Jack. Any other questions?
Yep, you have a couple.
All right, Shane.
I can't believe I'm doing this at this hour, but I was curious. I was curious when I read it. So for example, for the Old Post Tavern lease, is that for like the sidewalk or is that the whole building? All right.
Mr. Walsh?
Frank, why is the rental income miscellaneous going up by 1,093%?
Just asked.
Somebody asked, I was reading something
Jack
else.
just, yeah.
Don't worry about it.
He's gonna split it out for
All
us and
right.
give us an
Okay.
idea.
And then the lease to Sprint, why is it down 80%? Almost 81%. It goes down from 120 to 22,937 in this year's budget.
I'd have to talk to Connie about it. Some people sound like they may have the details, but I think that has something to do with the interplay with Dish. But I believe that lease went away. But I could get the exact details on that.
Okay, could that just be a winding out of like a couple of months worth of stuff?
They banned it now. You're saying? Sorry, they abandoned that lease. So for Sprint, it's just not in the.
But there's still going to be some income in the 25 budget.
I'll have to look in the lines because, the way there's a lot of little small leases in the town and sometimes they kind of get put into these lines and they may change from year to year. So like I said, I can get the schedule that I used from Connie to put those budget numbers together.
And you'll put those in the Google sheet for us? I mean, if they're self-explanatory, we may not need to have them, discuss
Yeah,
them.
I think you'll find them self-explanatory.
Okay.
The only other thing I wanted to point out, I can wait for other questions. I don't want to speak out of turn, but there is one more thing that I'd want to point out, but
Go ahead.
Go ahead.
just in talking with the parking authority, they don't have a current contract with the town, and I spoke with Eileen Flora at the parking authority, and the schedule that I was going off of, it's something that still needs to be negotiated, and looking at their numbers, I think that the rental payment that they pay for, I forget which lot is it? It is the parking authority lease 49302. From speaking with her, I think that realistically, that number will probably come down closer to the $250,000 number moving forward. Like I said, it's something that needs to be negotiated. I don't think it'll be negotiated before we end this process. And I think just to, be conservative and recognize that I think that's the lowest that it will go. I would recommend that we would maybe want to lower that, especially considering that it seems like we have some offsets that would be moving in the other direction.
Wait, so instead of leaving it flat, you're saying you're going to recommend to lower it?
I'd recommend lowering it. I mean, just looking at their, like I said, I met with her briefly because I knew this would be coming up at this meeting, and I just wanted to get an understanding. I haven't traditionally negotiated the contract in the past, but I wanted to have information for this meeting. And yeah, because their numbers still aren't at pre-pandemic levels.
But why would we lower it if we're going to be negotiating a new lease? Is that what we're going to do?
Yeah, but the numbers, the lease agreement, there hasn't been a contract for a while, and I think the numbers in this budget were numbers that I had gotten from a schedule from the prior finance director, but they weren't per any agreement. I think it was kind of something that they were working on. But in looking at the numbers, if you keep that number, I think the parking authority would be at a deficit potentially. And I know that they have capital projects. So I've asked her for more information on their fund balance and the capital projects that they may have upcoming to see if they have adequate money and what the adequate number would be. But I think just to protect from, the potential that it could be lower.
Who's negotiating the lease, Frank?
I think it's something that when current administration came in, it's something that I think that we'll be working on soon. I talked to Eileen and I said that I would be bringing attention. It kind of in the transition, it's something it's not a big number. So
It's just, I mean, I'm not trying to, it's just in nobody's lap right now. So
it's just in nobody's
Yeah,
lap
just
right now.
Yeah, so I'll put
figure
it
it
on the list. I probably Phil and talk to Phil about it. Yeah.
All right.
Jim?
The fair premium lease, are they just done with that? They just don't want any use of it because they can't fill it up? I know we've used it for other things like, the stuff with COVID and whatever, but I see it zeros for the last 3 or 4 years. Are they just done with that? They haven't paid rent since fiscal year 21.
49302, Frank.
Yeah, I think that's something, I know, like I said, part of this it's not really an agreement, but what they were going based on is that they haven't been putting cars in there. So there's no, I don't think we were going to continue with the rental agreement for them, but I don't know I can't really speak confidently on it, but it seems like it was something that was going to be discontinued essentially.
All right. Will you guys talk to them about it? Because if so, then let's just get it off of here, but it shouldn't say town parking anymore.
Yeah. So
Or
next
it
year,
should be day parking. And if people want to go there, the police can ticket them or send them a thing.
yeah.
Yeah. I mean,
Yeah,
it's something should be done.
I think it's something that, that'll be discussed as we move into speaking them more formally.
Okay. Can you just let the board know once that's negotiated?
Yeah, yes.
Thanks.
Yes, I will.
Thanks, Frank. I appreciate it.
Okay. Any other questions on revenue?
No, we're good.
All right. If anybody thinks of any later, you know where to put them.
Google it.
Google it. Google Sheet. All right. All right. Maybe if we just quickly get through finance department expense, and maybe we can reserve, unless debt service is going to take a minute, we can push that off until our next meeting. But finance expense budget, David, is that you?
It's flat. No.
I think there could just be Q&A on that.
Okay. Questions on this budget?
It's all head count, right? And that's it.
Yeah. Does anybody want to ask any questions?
Yeah, I'd like to ask why the regular payroll's up 5.9%, and while you're at it, why part-time payroll is up 22.79%.
Okay.
That's part of last year in the budget, the rate that was reflected for the part-time, I'm starting with the part-time, but the part-time grant coordinator rate was set at $30 an hour. It's actually at $35 an hour, and just similar to the wage compression issues, I've made an assumption of, a potential additional increase. For the regular payroll, that's just the additional costs associated with, the canvassing of a chief fiscal officer and the anticipated amount that would be marketed and salaried at.
Madam Chair, may I ask a question?
Yes. Yeah, sorry about that, Amy. I didn't see you. Yep.
For the CFO, we have it going from 151 to 190. Why is it such an increase?
Hi, I'm back for that question. HR, we did some comparative. Right now, we just posted for the position we're interviewing for the CFO right now. And what we looked at, we're looking at, and I hope the backup's in there with the right one. Okay. We're looking at basically the salaries for a CFO, and it's really competitive because right now I have Norwalk in here, and I learned that CFO, well, the chief financial officer left, and they're advertising at a rate of, I think, close to 150 to 191. And I think Norwalk's a lot like we are because our CFO has, like they do, not standalone. Westport at 200, close to 200, or over 200 is a standalone, like a finance department with nothing under. This, our CFO has controller, I shouldn't say controller, budget director, auditor, and as well as other employees. 13 employees is just the finance department. Information technology, there's 6 employees. Purchasing, 4 employees. Tax assessor, they're responsible, 7 employees. And the tax collector with 7 employees. That's a lot of departments to oversee. And if you look at some of the people many of them are in the union, but they're higher salaried professionals as well. And so to be able to get the right CFO, a seasoned CFO, not someone who has the experience that can handle this type of, especially the municipal, place we're in, and the type of things and the turnaround, a lot of turnaround, a lot of big projects. We had to be competitive. So I used, you look at even No Canaan, they're much smaller than we are. And that CFO only oversees finance, tax assessor, and tax collector. They're at 187.
Okay, so basically what you're saying is it's the market rate. That's
Yes,
what it's going for.
Thank you
the
very much.
positions?
Yes, that's a much way. When I'm tired, I talk too much.
That's
Sorry.
okay. I don't mean to interrupt. I
okay.
think you answered my question.
Oh,
Thank
okay.
you.
Yeah, and I should have pointed out so that is on page 7 of the posted backup. Kathleen's analysis is in there, and all that detail is listed in terms of the competitive salaries in Fairfield County, as well as the differences between the position in terms of what those roles are responsible for overseeing. So if anybody hadn't seen that, that is in there. So we've got, does that answer your question, Mr. Walsh, or do you have a follow-up?
I have a question. I mean, number one, the Norwalk is how much?
Being average, I'm just thinking roughly, it was, I think, close to 150 to 191 is the range.
Yep. And newsflash, our ex-CFO is now the CFO there. So
Right. I'm
he's,
sorry.
Jared Schmidt is now the CFO there.
Okay, I didn't know.
Yep. Norwalk.
For him, that's great.
Yep, yeah.
Get a higher salary too, I hope.
I have no idea. And Westport, I think you're wrong about that no one reports. There's other departments that report to the CFO. So I don't know if you talked to the CFO yourself, but I'll find out because I've talked to the CFO there.
Okay, I will tell you this. I checked what was on their org chart and what they had online and what they had on the website. So that's what I used.
Okay. Did anybody talk to Westport themselves or you just looked up?
I did not talk to Westport directly. I looked at their information on their online. I know it's pretty high. I mean, they don't have as many departments as our CFO.
Okay. What I'm not understanding, I guess, is that I've been in this business a while. And generally when we hire a new department head, we're actually seeing the salaries going low because we've had people stay there for a while. So I don't know why it started off at, is what you have 190 here?
No, it's 170
170? Okay.
to 190.
170. What's in the budget? 190. So you've already advertised that basically this is a public document. You've now advertised that you have in your budget 190,000. You went right to the higher end. So we have no idea who we're going to get in the position, but there could be somebody willing to take it for the 154 or 156. So
There would be, but I don't think you're going to get the quality that you need to have to be in this position. And I would point out that when Mr. Mayor left, he was at close to 170. And if he had stayed, his salary would be at 183,501 with a 2.5% increase. So
what did he leave at? 165, not 170.
160, okay.
Right? Did he leave at 165?
No, it was closer to one, if you look at the backup, it's closer to 167.
Okay, I'm off by 2,000. My number's closer to yours than yours. But anyway.
And with a pension, I mean, that's a fair, I think that's another thing. I'm not sure about these other towns. Or if that's relevant, but we don't have a pension.
You're saying Mr. Mayor's getting a pension from the town of Fairfield right now?
Yes, he's getting a pension.
Okay.
Right now, anything we offer, we don't have a defined pension, we don't have the defined benefit pension that,
We define.
right, we have 401A, so that's another factor that I'm not sure, not all municipalities have 401As, they still have the defined benefit pension, which is another,
Okay, and then are we using, I guess, because we're still,
Sorry, he was pension eligible, I apologize.
he doesn't get a pension, right?
No, I think he was pension eligible.
Okay, so he turned down the pension?
You have to hit the 10-year.
He didn't vest.
In order to do that. Our vesting on the 401 is 3 years, but some I would point out, not necessarily in her comps, but has come up in other things. Some of the municipalities in the 401 are at 10%. There's other variability here. We're only at 5% of the match.
Okay. As you know, Ms. Simpson, we've used a outside organization to do a lot of department head searches. Frank was found through that process, correct? Ms. Simpson, you were found through that process. Right?
Yes.
You were found through that process. And I think, who was the other one, Frank, you mentioned?
Tim Bishop, I think, for
Yeah.
conservation.
So are we using that same company to do the vetting?
No, we're not.
Why not?
Well,
Did it suck? I mean, why didn't we use it?
no, there was, you can ask room here. No, I think they were very good, but I don't know, it wasn't necessary. When we advertised, we got some very excellent candidates
Okay, so,
and extremely, very, very highly qualified.
okay, so when we used them before, have you used them while you've been in your seat before?
No,
You haven't used them? Why not?
Haven't
No
needed
department
to.
heads, no department heads came up?
No, there's been no department heads and I haven't needed to use them.
Okay.
And if
So-
I did find that we didn't find anyone through a regular search, I certainly would consider it.
Oh, so for all three of you who went through that process, the town was trying to find somebody and was failing at finding anybody to apply for the job.
I don't know about that. I'm just saying that I don't know what the circumstances are with the town at that point.
Mhm.
I just know right now that with this high-level position, we put out a posting and we attracted some very high-level candidates.
Okay. And who did that interview process and stuff like that? What's the process?
We're in the process right now.
What
the
is that
interview process? I'd rather not discuss the interview process right now while it's pending.
Okay. Okay, so we'll talk about it after.
Happy to.
Excellent. All right. I think this position's listed for too much money in here. I think we could have tried to get more people for less money, and I have a problem with it. I'm just going to state that.
Okay, thank you. All right, I know we want to get out of here. I just want to say, I have maybe a little bit different view. I think if we get a terrific candidate, and we can find that candidate for less money, then that's good. What I am worried about though, and I asked a couple questions in this regard, I don't want to budget at the low end of this thing and then have the administration come back and say, hey, we needed to, spend another $30,000 or $40,000 to get the right person. So Board of Finance, can you transfer more money? I don't know if this board would be comfortable with that, but I think that I want to make sure that the budget has the appropriate amount of money in it to cover the market for the positions that we're hiring, because at least from my perspective, I wouldn't be excited about having the administration come back to us, when we know what the market is now and tell us that they need more money later. So I'd rather have it in the budget, and that's just my opinion.
My opinion on that is we've talked a number of times on this budget so far through the budget nights we've had so far. And we've talked about, we'll probably have to make an appropriation during the year for this, that, or the other thing. And that's why we could easily have done that, just like all the other things we've talked about doing that for.
So Joe,
Yeah, I hear you, Jim. I think to me, and I don't want to belabor this and agree to disagree, because I respect your point. I think there's a big difference if we're talking about an initiative that we don't have our arms around. We don't know what it's going to take in terms of systems or people or scope or anything. We don't know what it's going to take at all. And management doesn't have a plan. And so they're going to need to work for 3 or 4 months and come back to us with something. I'm very open to a mid-year discussion on that. I didn't think this board, I wouldn't be excited about, and I don't think this board should be excited about, us undershooting intentionally the market rate for open positions that we know we have to hire and we're in the middle of interviewing for, and then coming back to us in a month or 2 months. So we can agree to disagree on that, but I think this budget for open positions, we ought to have the right amount in there. So, but I do see this differently from those other open initiatives, because those, we don't know what they are yet.
just say one thing before, I can't
Yes.
believe I'm talking at quarter. to one. This is being advertised for between 170 to 190, right?
Oh, gosh. Yes, it
Fine,
has.
That's fine.
Kathleen, Lori, just quickly, is there a complete job description now, including what departments? I think we're all familiar, just does it list that in the job opening, job description, whatever you want to call it, that you advertise, and can we get a copy of that?
Yeah.
No, we
think-
have the comparison she used, right? Or, I'm sorry, did I
No,
miss it?
the job description I thought was there, but you're sure you can have it. It's also was posted on,
comparison.
description was posted on the website in HR, but I'll get it for you.
Okay, no problem. I'll find it. Thank you.
All right, thank you.
Any CFO that was worth their weight that we should be hiring should damn well have taken a look at our budget before they come into an interview, and we'll see it's $190,000. I don't agree with that, but we disagree. That's okay. All right.
Okay, any other questions on this budget? Okay, is the board, do we want to do debt service or does the board want to?
We got to work tomorrow.
Okay.
Let's do it on Tuesday.
All right, we'll do that on Tuesday. I just appreciate it if anyone, just to not spend unnecessary time on Tuesday so that we can get to follow-up items. If you do have questions on debt service, it's fairly straightforward. Please put the questions out in advance. You might get them answered so that we don't have to talk about it. All right, do we have a motion to adjourn then?
I'll make a motion. Amy Ruggiero.
Amy, thank you. Seconded by Kevin. All in favor? Okay, good night, everyone.